Morning, morning, morning. My E. coli burger. Isn't that just quinky dink that Trump goes to McDonald's and then 2 days later, E. coli? McDonald's headline. McDonald Trump. To the huge. Saves up. Jeez. What did they do? Where's your dog's back on? Wow. What's up, Donkey Nuts? For crying out loud. Good God, that is so. I don't know why that goes crazy every day. Morning, Mr. Peach. Oh my gosh. Oh my gosh. I didn't think this one had that kind of a move in it. Well, do you have a company for your trading activities? No, Phoenix, this is it, man. I don't sell I don't sell anything. I just bombard you with millions and millions of ads until you give me your free Prime sub. Feds are here. Oh gosh. Does he mean am I incorporated? He could mean that. Do you mean like do I have an LLC for my trading activities? If so, I don't. Some people do. to optimize, I don't understand why it would be beneficial to me. If somebody could tell me why, I would think about it. I don't see how taxes would be any different. If I could save money by being incorporated or any other way, and my CPA has not told me that, which is a high probability, but then that would just be ridiculous. You're an accountant, can't help trade. Yep, that's kind of where I'm at. Mad Hatter. There might be protections or something that I might want to think about since I'm a streamer as well, but that's the only thing I think of is maybe protections. But taxes, I'm not losing or saving anything. Black Ops 6 is Friday. Wait, I already thought it was out. Is it not out? Isn't that the one where you can jump around all crazy and stuff? That was beta? Damn, 17%? What? It's too early for this shit. Freaking raccoons all over me. That sounds like a Friday night. Bring in the animals. Speaking of hockey stuff, I need to put a jersey in. Times Back shot. Wait, back shot off the glass in the Caps game. Are we talking about hockey? What are you talking about? No, I did not. It looks like he's dancing on my freaking face. Is that a kid? How dare you? Got a deer at the butcher yesterday. Buddy shot it, and I'm just taking the meat, about to fill my freezer up. Hell yeah, that's the best kind. You know, you got some friend that just wants to hump, but doesn't want the meat. Damn it, Joshua J. Fox. Is it Velcro time? Not yet. I haven't made a buck. I saw that dispute. Was that you that put that picture up? Damn you. Freaking Joshua, are you making mad stacks today? Just throwing the biddies at me. LRM with that. Oh my gosh. That one's so provocative. Bonds are cracking. I need to learn bonds, man. I don't know bonds. Pedro Bedo. Ha ha ha. Just know what the bonds mean. That's the problem. I don't. Like, if I sit here and think about it and do 5 minutes of research, I could remind myself what bonds do mean, but I don't. So if anyone mentions bonds, you need to mention why that's important. Because I don't know. And probably the majority of people here don't. ENPH. I don't know what this is. I mean, I've traded the company. Enphase Energy. Okay, so energy. So is it the idea that the equity risk on, is it the risk on appetite? Is that what you're saying? Energy down, you know, the safe havens are down. People are cashing out, going to higher risk stuff. Bull market in effect. Or is this energy? Is this solar? Oh, is this solar? Oh, okay, that makes more sense then. EMPH is solar. I think I remember that. Lowered guidance. Okay. So it was the light. It was the lightning game. Oh yeah, I just watched that one. Duplicate. Really unlucky. WY $15.2 million contract. And new and renewal contracts in Q3. This is a former runner. 50-cent spread ain't gonna do it though. That's one to watch. WYY. And Chica. Oh. Give it to me, Daddy. the record. I wonder how many days in a row you've shit on my face first thing in the morning. I just don't know. Hershey milk. It's good luck. Guess so. Pedro. Got the stupid song in my head. Dude, this move on DJT is crazy. It's tripled in like 3 weeks. It makes me wonder if the other ones, like if Trump wins, like does the second tier sympathy plays just start going stupid? I'm almost gonna jump in BuzzFeed. It's a vague, isn't that the I don't even know how to say Ramaswamy, whatever his name is. Isn't he invested in this one? Then you got like Rumble, which is already moving. As long as that Polymarket polls stay as is. Save. Oh, you're going to save again. So we're going to hear about it all day long. She's making the yam on the save. Good boy. Good boy. I really wish there was a Kamala win stock. It might be China plays, but we'll get into all that next week when we start doing that. PLTR, huge connection to the VP. How so? Which VP? My internet feels. She is pro-Israel. Oh, I thought he meant VP candidate. Who was that? Chickaboo. Breaking A. I'm gonna have that stupid song in my head all day. I ran a full member of Bricks just hit. Russians, Putin tells Iran's, whatever his name is, Iran has become a full-fledged member of BRICS group. The House of Cards has begun. Well, whatever. We can make them come back, right? Just a few bombs here, a few bombs there. Unconditional conditional surrender here. Oh, wait, they're full-fledged allies of Russia. Russia, China, Iran. Damn. $20 billion Korean. Is it only 20 billion that we've sent them, or is that a new thing? can't do Twitch. Too many damn ads. I'll hang out in here instead. Blind leader, don't you worry. Ads are coming to YouTube. Don't you freaking worry. Use your Prime, my friend. That's the point. Thank you, Siru. Thank you, Siru. What am I looking at? Pipe candy. I haven't really seen much yet that has tickled my fancy. VRAX is the penny stock, the shit stock. Let's call it what it is. Shit stock with too much volume right now. Maybe a 5-minute on it. Mojo Jojo, let's go. 27. One of the grandkids steals that every month so they can sub to some streamer or other. Oh, jeez, that's funny. It's new. Printing our debt, giving it to Ukraine, using Russia sees funds to service it beyond that. Yeah, that would probably have a bad look to it, huh? Man, there's like no end in sight with that shit. Here's your 5-minute on VRAX. It was actually a pretty decent one. LRHC? What's that one? That one actually looked really good. LRHC. You playing the pennies, huh? Was this just ER? Hello? Interwebs. September 2024. I was wondering what your icon was disputed. Spy looking amazing. Nothing crazy here, right? Just sitting on the 90 MA on the daily. Hopefully we don't dip below that, but it is what it is. Bivy with the daily cock. LRN, 13% short interest, up 25%. Really light volume, very spready. Here, it's just like they got distributed, but that's all. Is it a big deal? Well, I mean, it might not be a big deal, but it doesn't matter sometimes. You got a small cap company with a low float. The algos are obviously in it. There's no reason why a 4 million share float should have a 1 penny spread with bids and asks stacked in here. So the computers have jumped on this one today. So when I see this, I tend to shy away from it. Although that 5 minute was nice. If there's a 5 minute play to be had on some of these, that's usually when I'll play them. Otherwise, you just get chopped up. It's so bullshit. Yeah, Fun and DJT. I mean, this thing is insane this week. Funware. See, how is DJT done out of the gates? Yesterday, Grizzly? Grizzly Research going after Hershey's. Hershey's at a freaking year-long support level. No problem, pipe. Yeah, that's kind of what I'm looking at too, Nick. ALAB. Ooh, know how to pick them. Nice daily. This thing's gonna be wild. Spreads. Hopefully they tighten up. You think Tesla drops? That's my guess. Man, I think any car maker I would think would go down right now. Like, who's buying new cars? TVGN daily. Check GM. Whoa, they had ER? Well, there we go. I said, well, was this earnings or was this something else? Oh, there's earnings right there. Okay. Go away. Clicked on it, it won't go away. Okay, there we go. So when did their earnings come out? Did it come out at 9:30? Surely not. It went down immediately and then just skyrocketed. All right. I'm going to take a little bathroom break here, be back after the open because still taking the training wheels off after being back. I don't want to be tempted to trade the first 5 minutes, so I'm going to distract myself and we'll be back. Crazy moves already. Cuck right here. Has Drug got the daily cock yet? Almost. Wow. Funware trying to pull off VWAP break. Got it. LRN 5 minutes looking decent so far. Gotta let that close. DJT 5 minute just went off. Jeez. Really liking this LRN 5 right now. Big level here. Jeez. It did crack this one. Good first trade. TVGN 5 minute. What am I in at? 55? What the hell? What a bullshit entry. Yeah. Gosh. What a bullshit entry. Okay, hello, 5 minute. Setting up. ALAB. Oh, stop down my LRN. Forgot all about that. Now DJT goes. Apple 265. Jeez. $10 is home sales. Forecast is minus 1.6%. A month. Little cuck here on fun, not really doing much yet. DJT is a little floppy if it matters. Basically in line on home sales. Trying a little 1 minute play here. Nope. See there. What am I looking at here? Jeez. Yeah, see, this is where I just don't understand how that affects other things. So, again, if you talk bonds, I got to know what that means. I see it as far as TA goes, but I don't know what that means as far as the rest of the market. KRA doing some work today. Daily cock. LRN 5 minutes setting up. Some time taker. Damn. TVGN. What is that? LRN 5 minute again. Could also be a down play. It's an inside candle, so you can play it both ways. Jeff Bezos, let's go. 4 months.
Good morning, my dudes.
Log in, please. What are you talking about? You're not allowed to talk in code this week. Oh, TMF. You just copy pasta, random shit. How am I supposed to know it's connected to 2 posts earlier? This freaking guy. $65. Is this holding up? Take your time. Okay. Why isn't the halt bot showing up on stream? Let's look why. What's that? All right, let's see if that fixed it. I don't know. Phoneware coming back up. LRN 5 minute is still, actually, it's really nice looking now because you did a 5 minute cuck and it didn't do anything. So if we get a 5 minute cock, I'm going to be long. As long as it doesn't do anything. If it starts cratering through here, then no bueno. But what you're talking about? Anyone have a resumption? Cosmo, you got a resumption quote on LRHC? Last time, flat. Okay, that's okay. That's good, actually. Last time I halted up, it gapped down. Couple lines here, there, and there. 160. So a gap down. Okay. 12:18. Couple minutes left on LRHC. Fun 5 minute. $165. Okay. See if there's a diagonal here. There was a 2-point diagonal that we've blown through. Big levels in around 2 and 220 from previous little mini spikes. You get over that, then 275, and yeah, we'll see. 1 minute left. High daybreak would be nice. $18. Actually, this clock's wrong, so it's more like 10 seconds now. Oh, that fell. Weird price action. Jeez. Oh, good trade. Y'all in your penny plays today. Bivy has that 420 level. I guess that's high day. DJT5. Either direction. This is the short attempt here. Yep, there it goes. Microsoft. Oh, they got earnings today or something? What was the first IPO Chuck just mentioned? FTL? The second was LBGJ, both in the $4 range. So that's the nice spot for IPOs. FGL? Oh, not FTL. Okay. FGL. Watch those when they open up. Quotes on TMF. I got 47.46 by 47.47. And you're just saying that because you're long and you wanted me to look at it for you and show how amazing you are. I can respect that. TVG in 5 minute. Still don't like the 1 minute MACD, but it's bigger float, so who knows? LRHC, hold it down. Okay. Wow, Starbucks. DJT dumpy dumpy. Righty. Gosh, there's nothing I really like right now. Maybe TVGN 5 minute. $5,800 gamma building. My wife left me. Congrats. Oh my gosh. This crew is so jacked up. What was the reason, Soils? Freedom, like you. Oh my gosh. Penis too big. The old penis too big excuse. I'm not liking anything right now. Maybe TVGN 5. Maybe. Short stay restricted. Possible. Have an interview tomorrow for a different role. Same company? Well, good luck. TVGN 5-minute cuck did nothing there, so watch the 280 break. Damn it. Sorry, I just reversed it all. Should have known better. Mm-hmm. This is why I don't like doing short straight stocks. They're so hard to. If you feel like the move down is coming, it's just so hard to get your entry. I don't like that. I'll look at a stack cheese. LRN cuck and go 5-minute potential. Maybe a long here. Got some of it back. $5-minute on TVGN went. Oh, these spreads, jeez. So OKLO with that 5-minute cock doesn't look so good unless it gets going. Nice little cuck and go on the 5 here up with the 9 EMA. TVG and 5-minute cuck potential. Failed move. Watch that short there. I can't short it. Starbucks 5-minute hammer. Damn. For 89. watch drug. Hmm. There's the 5-minute cuck. Bunch of levels down here to domino through, if when. There we go. Push it now. Now they'll push it. Now they'll push it. Look at that big ass. There we go. Now we know they want to do it. Oh, come on. One more penny. Yeah. Yeah. As soon as I hit the freaking cover button, 10-cent pop. Suck my dick. Blazing. Wouldn't put it past him. We do have a video to watch today. Guys in Discord. Had this one. Little Chem Cardon. Chem Carson.
This accounts here. I did not announce this this conversation. I'm trying to do the whole surprise and delight thing, right, with these Lead Lag Live interviews. And no one is more delightful than Jem Carson. So we're going to have a good conversation here on options, on lost decades, on active management. Now, because this is live streaming as a video, it doesn't matter if you're watching on LinkedIn, X, YouTube. I can see your comments, which means if you want to engage, ask questions during this live hour, post on whatever platform you're on. I'll try and show that question or comment on screen, and Jem and I will go back and forth on this. This will be an edited podcast under Lead Lag Live on all of your favorite platforms, Apple, YouTube, and Spotify.
The exchange, 13 years, 13 to 14, 98. What's up with that is that I started my career in 1998 on the trading floor. Was down there for essentially 14 years, 13 to 14 years. And all those, everybody down there, all the groups, it's an old world, right? Everybody's still very much connected. I still trade a decent amount through the floor. And periodically stop down there to check in with our brokers, check in with the exchange. Again, was very involved from the very beginning, even before the CBOE went public. Even had kind of shares, et cetera, as a seat holder down there. So still very much connected to the exchange. Head down there every once in a while. Rick is an old friend, somebody who's been, I used to see him out in front of the CBOT in '98, just puffing cigarettes, Camels. He's long since quit smoking. A lot of other things, different world. But anyway, old friend, and so we just connect and get to talk markets every once in a while down there when I swim through.
Is there any edge to being physically down there? Like you feel more connected to markets, or you feel like you know more things?
Love that from the store.
If I was down there full time, there's definitely still an
Let's
edge
go,
to
Coach Red.
on the floor.
Coach Red with the 51-month streak.
I think the edge is less about
Holy cow.
spreads or it's more about seeing and being amidst all of the trades that are happening and understanding being in a community of
his wife loves him.
Of hundreds of
gets
traders
sexier and sexier every day.
Experienced and so there's a lot of information flow, a lot of broad knowledge. Again, less than it used to be. You can get a lot of that in other ways nowadays, but that level of expertise all tied up in one space together, seeing all the flow.
MCD McDonald's at the highs, back over
fully enthralled is
$300. That's Michael Charlie Delta.
So I named this conversation "Options Have Changed Everything About Markets." Not only because I have a flair for the dramatic on X, as many people may be aware, but I do think there's an argument to be made that the tail is wagging the dog, so to speak, that the derivative is driving the underlying. Is there validity to that idea that options now are
being
really
discussed on CNBC? David Palmer from Evercore.
Oh, you're like, this is the fattest pitch. You just threw me a softball.
I'm helping you out, man. Come on, man. I'm with you.
Look, it's not the tail wagging the dog. It's the dog. And I've kind of talked about this, but I'm going to repeat it for people who haven't heard it. A stock or a bond or a commodity, all of those things are, the value of that is just the expected value, the asset value is the expected value of a much more rich, much more beautiful actual asset. It has, you are not just some dollar value that represents you. You have all of these characteristics, right, Michael? We all do. And if I found somebody with your value and just put them up and we couldn't see who you were, people would think you're the same person. You're not the same person. Assets are different. Some things might be very right distributed with a left fat tail. The lifetime or the earnings of that stock may be very different over time. It's a very three-dimensional thing, and options give you that full clarity into that asset, all of the points of the distribution, the moneyness, the time to expiration, the full three dimensions. So if something's right distributed, left fat tail, but something is left distributed, right fat tail, they're very different assets. But they may have the same expected value. They may have the same asset value. So we call them derivatives because the world started with that expected value as the starting point. So people assume these are just derivatives of those things. I'm here to tell you that the options are actually a clearer, better picture of the whole asset, and that actually the summary of that distribution is just that asset value. And you could argue the stock value or the bond value is just a derivative, a summary of that more rich information. So it's not the tail wagging the dog; it is the dog. It's becoming more the dog every day, and the tail, I would argue, is the asset value, and that's increasingly becoming.
Isn't that crazy? Say it again. Say it again for those in the back.
Well, assume these are just derivatives of those things. I'm here to tell you that the options are actually a clearer, better picture of the whole asset, and that actually the summary of that distribution is just that asset value. And you could argue the stock value or the bond value is just a derivative, a summary of that more rich information. So it's not the tail wagging the dog; it is the dog. It's becoming more the dog every day, and the tail, I would argue, is the asset value, and that's increasingly becoming the case.
But in fairness, it's a big ass dog, right? I mean, what are the estimates? 1 quadrillion, right, in value as far as the options market.
Well, that stuff's deceptive, and I'll tell you why. Notional value, yes. Right? If I go buy a 1 delta put for a dime or something, 10 cents, the notional value is still of that thing. If we go down there, is still 100% of the market. That doesn't mean that the exposure of that thing is notionally the same as buying
Starbucks
or buying a future or selling a future. So it's very deceptive. I think directionally speaking, in terms of delta exposure, options probably
I'll take our TSN Taiwan Semi shares seeing a spike in activity, new highs for TSM.
Exposure. Now that said, I think the amount of flows that are generated on a daily active basis from these is again 1 or 2% of the underlying. 1 or 2% of a $50 trillion market, you do the math, is hundreds, is a $500 billion of flow. The average flow that pushes a market on a given day, the incremental amount is about 100 to 150 billion. So these things have outsized dramatic effects on day-to-day movement and path and flows. That does not mean they are as big as the market. But again, those two things are very different things. I think people have a hard time separating.
You get a sense that options are increasingly just being used for outright speculative gambling as opposed to hedging. I mean, you can kind of go back to the origins of forward contracts and futures, right? They were meant to also hedge, right, primarily. Has the nature of the type of trader in options changed at all?
Yes. The people who are using options have changed. It's much more broadly distributed, much more accessible. I think of options as a superior technology. As I mentioned, you can bet on dimensionality. You can take any piece of information and bet just specifically on that information instead of just taking a bet on the whole asset and all the information in the world. And that reality has brought in, it's widened the boat. It's increased the size of the people that can come in. Technology needs network effects. It needs more people involved, more volume. Any technology does. It needs new access, new product, new education. Any technology does. There's lots of technologies that we always knew were going to be the most important, but they took time to adopt. And then, adoption hits a tipping point and then accelerates. That's what's happening with options. And we've seen secular growth since their origin. I've been doing this for 26 years. The volume and the accessibility in the space has increased every year exponentially. It is a superior product, and whereas it's gone from 0.1 to 1%, and again, I believe will be eventually 50, 60, 70% of all trading. Now, that said, it was originally just used in a very kind of bespoke way for hedging. Even the CBOE's conference I just got back from is called the Risk Management Conference. They've always been seen as a place you go to hedge or do something along those lines. The reality is you can use options to position in any possible way, much more flexibly, much more precisely than owning an underlying asset. and people are waking up to that. And again, they're
FBLA,
able to
FB
trade these
Bancorp
things because they're more
shares are
liquid, there's
open.
more, they're more
IPO
accessible, there's more
$12.25,
access, more
now at
education.
$12.30.
So yeah, the type of people playing are different.
Lima Alpha,
That's not
FBLA.
bad. That's actually good in the sense that people are betting on all their outcomes more precisely.
BA
with a tool
Boeing
that's
CEO
more
says
precise.
38 per month target for 737
I
production will
hate
be
framing it
delayed.
as
That on their
just
analyst call,
speculative
BA
and betting
Boeing.
and gambling. That kind of pokes this fire of like, oh, this is just people. This is a casino. You know, I'm here to tell you the markets have always been a casino. They are a place to invest. They are a place to get capital appreciation from your money. People
Flushed
speculate
him
on
out.
whether a stock is more worth something than
LRN
another
5-minute
thing.
cuck and
There,
go.
it is a liquid marketplace where people compete to decide whether or not something is a good investment.
Go to 50% of the market
That's not, you
trading
can
share.
call it
I don't know.
betting. It's more education. So yeah, the type of people playing are different. That's not bad. That's actually good in the sense that people are betting on all their outcomes more precisely with a tool that's more precise. I hate framing it as just speculative and betting and gambling. That kind of pokes this fire of like, oh, this is just people. This is a casino. You know, I'm here to tell you the markets have always been a casino. They are a place to invest. They are a place to get capital
rewind far enough,
appreciation from
apparently.
your money. People speculate on whether a stock is more worth something than another thing. There, it is a liquid marketplace where people compete to
70%?
decide
Is it
whether or not something
70%? Jeez.
is a good investment. That's not. You can call it.
If that
betting, you can
happens,
call it whatever you
we're
want.
waiting.
That's what we do in our lives. That's what everybody does. You,
Talk about
you make a
volatility.
decision to take a job because you think it's a good
Jeez.
opportunity for you. You start a company because you think there's a great potential for profit and to build a business that's going to change the world. It's not betting.
You think it's 1 to 2% right now? He said
but
it's
it
going to
is,
70%.
It is speculation in a sense.
Oh my.
Let's go to some of the comments on YouTube here. One from some John Doe. Hi, Jem. What are your favorite instruments when you trade around volatility? Thanks in advance.
Oh man, I guess it
It's
depends.
not a White Claw,
It
it's
depends
a
what we're betting
Celsius.
on, right?
Freaking
If we're betting on interest rates, it may be SOFR futures and options. If you're betting on,
Don't drink diet beer.
if you're betting on equities, just depends. Am I betting on dispersion, single list versus index? Am I betting on outright long volatility or short volatility? So that's a hard question. As I mentioned, options represent a whole distribution of outcomes. What am I betting on? Tell me the bet you want to make, and I can give you the specific product that is best for.
If you're not sure
betting
what's
on
green,
that outcome.
yeah.
But generally speaking, not ETFs. More the options themselves. We can do more dimensionality because they're not linear and they're more specific. We can do options on options, fixed options.
What could go wrong with
can be
options
okay
on
as well.
options?
But we really
That's
like
70%
getting in the most
of market
convex
activity.
part of the distribution and being able to be as precise as possible.
What does that sound like?
And so we really prefer the options themselves.
Let's go.
Speaking about VIX, that's a good transition to another question from Ollie on YouTube. Probably will get asked regardless. What is Jem's outlook from now?
Ticker
until
SPR
November
shares selling
5th?
off, new lows. Sandy Papa Romeo.
Could a big escalation between Israel and Iran prevent a post-election vol crush?
So, listen, anything is possible.
Well, ticker Boeing shares also
if you
selling
ask
off.
me that question, could something happen? Yes. If oil can go to negative 30, anything can happen. That said, we deal in probabilities.
Boeing CFO says
we deal in
expect to burn
magnitude as
cash
well.
into
So
Q4
probability
and
times
in
magnitude is
2025.
outcome.
Jeez.
So between now and Nov 5th, let's start there because there's two kind of questions there. You're
BA
likely
Boeing
to see,
CFO
this
says
is a
expect to burn cash
people
in
who follow me
Q4 and in 2025.
understand all those
That's,
positive
BA
flows going
Boeing.
into OPEX have come through the pipe, right? October expiration has passed, and we're amidst this window of non-strength, what some people call window of weakness, right? This period where those flows have now subsided. That doesn't mean we have to go down, but guess what? Go look at the probabilities, go look at history.
That's
Here we
better
are
not
again,
bounce
end of
on that kind of
expiration, and we're kind
news.
of just
I'm sorry.
drifting and floundering a bit. That's just some give back. It's healthy. There's nothing to be alarmed by. We're not crashing. But it's healthy in the context of the flows have now subsided a bit. So if you were long going in
38-month
OPEX, you took
target for
profits,
737 production will be delayed.
You are now waiting for
How is this
a period where
down-powered?
not everybody is positioned long and looking for an opportunity to re-enter. Now, could that be here? Maybe it's been several days. Could it be 150 points from here? Very possibly, maybe even more probable than here. But the point is, this is not the time to be speculating on long convexity to the upside at this moment. It's all about timelines. They were talking about this week, right? The positioning is such too that it's very cheap to own short-dated options, meaning week to 2 week options before the election. It's more expensive to own post-election, particularly as you get out to December. And the way the curve is priced and positioning is, people are short the expensive stuff in December, and they're long the cheap stuff end of October, November 1st as a hedge. And the part that makes that positioning kind of lose in this window is we grind lower and back end vol stays firm and the front collapses. So that's the most likely probability. Again, that's not a crash.
Selling.
It's not a scenario that you should be
Go
super
break
alarmed
154.
about. And
Some
it should be a
support
buying
there.
opportunity.
Crush it.
And not just a little buying opportunity. I think the market still goes higher from here, and it can start from anywhere from today after this couple day pullback
For a
to
win.
a week or so plus. A
Missed
week
my
to 2 weeks from
LRN
now
trade
into
because
the
of this,
election.
but decent.
With it 100, the S&P 150 points lower. It's
DVAX,
always gonna take it to the
Dynavax,
point that
shares
seems more stressful, or maybe he's wrong. Maybe it's going to be
spiking
bigger,
here.
or it's going to happen quicker than you expect.
Delta
Never
Victor
going to be
Alpha,
easy, I can tell you
X-ray,
that.
DVAX.
But that's the higher probability kind of range of outcomes for the next week or
Boeing
two.
CFO says
That said,
have a plan to
structurally,
address balance
there's
sheet
all kinds of positive
near
flows
term
that I've
that
talked about ad nauseum.
could include
coming into
offering of
the end
equity and
year. Some of
equity-linked
it's being
securities.
front-run,
That's
has been
Boeing.
front-run. I've called for quite some time that we would
Oh,
be very low
jeez.
vol, grind higher throughout the summer, get a wobble in the fall, something that's about 10%. Guess what? We got that. And then that would be a buying opportunity. And then we would rally and hit 6,000, 6,100, maybe higher. All that's still in play. Everything we've said since March still applies. It's just a matter of precise timing this week, that week, scale and size. Some of this will be affected by the election outcome. Some of this, will be affected by what happens in the Middle East and other things into the end of the year. Those are all still true, but those aren't the
I
primary
love news
drivers.
plays on Boeing,
The reason we're
man.
able to predict this
They're
regardless
so
of
fun.
kind of who wins, what's happening, all these things that have happened this year is because the flows are what they are, and the flows are incredibly positive going into the end of the year for a lot of the reasons I've enumerated before.
Let's get a little granular. When you say flows, what are you talking about? Like, where are those flows coming from?
Michael, you got to tune into my stuff. Everybody in the chat probably knows, but I'll
here, man. Come on.
I'm just kidding. I'm giving you a hard time. You're a busy man. Look, there are two primary things, just to kind of hit them very quickly.
First cock on.
One, there's a
some of
releveraging
these.
effect that happens
There it is.
at the end of the year. Jan 1
All right,
to give you
that's
a
good. A
sense
little
of
trade
scale
trade.
and size. U.S. markets are about 50 trillion. Global markets are another 50 trillion. All the assets tied to U.S. and global assets, another 200 trillion, right? So you're talking 300 trillion,
Stock.
massive
China
number.
has a
of
plan.
long assets. If we
Forget
say
that
just
they're
tied to
not
U.S., maybe 150 trillion, right? $150 trillion up 20% for the year is a $30
So
trillion.
you're getting a cock here with
increase
declining volume.
in
That's
collateral,
not what
increase
longs want
of
to
money,
see.
increase in
So
assets. Some people call that
BA
the
Boeing
wealth
CEO.
effect. I hate that
I
term.
think that we're better
Why?
off doing
Because
less and
people
doing
like
it
to
better than doing more.
make
and
this a
not doing it
personal
well.
thing. Like, people are getting wealthier. No, it's
BA
not about
Boeing.
people getting wealthier. I mean, that's part of it, but the majority is
Or-
banks have more collateral, funds have more made money and have more investment they need to reinvest. Entities create exposure, and this is counterintuitive for some people, based on risk. They maintain constant risk, and so if you make more collateral, because of the leverage on that collateral, you need to reinvest. So think of it as there's $30 trillion that throughout this year of new investment that has had to flow into the market. Some of it happens daily as money gets made. Some of it happens monthly. Some of it happens quarterly. some
Starbucks
of it
has like a
happens
double
annually.
bottom
Slower
5-minute
moving things,
potential. So
you know, like
96.21 break would be a long.
New private
For
equity
me.
funds, new hedge funds, new bank structured products.
Not
A lot of these
financial
things happen at
advice.
the end of the year.
Fun, Curl?
And what percent happen? I
Yeah,
don't
it's
know.
consolidating.
Let's make up a
I've been
number,
watching
10%. I think that's conservative. 10% of 30 trillion is $3 trillion. We have $3 trillion in that case being reinvested on Jan 1, when the average flows on a daily basis that decide direction are about 100 to 150 billion. That's sitting out there on Jan 1. That's part of why that's the major reason why the Santa Claus effect and the January effect, that 4-week period, is by far in 100 years dramatically an outlier to all other months of the year.
Cat jam,
That
cat
in
jam.
up years is a dramatic reinvestment that happens in markets. People don't understand that, but that's the primary driver. There's another.
Let's hear that again for those in the back.
There's $30 trillion that throughout this year of new investment that has had to flow into the market. Some of it happens daily as money gets made. Some of it happens monthly. Some of it happens quarterly. Some of it happens annual. The slower moving things, like new companies, new private equity funds, new hedge funds,
Good for a
new
1-minute cup.
bank structured products.
Should
A lot of
get
these things
filled
happen at
here.
the end of the year.
All right.
And what percent happen? I don't know. Let's make up a number, 10%. I think that's conservative.
That doesn't do
10%
anything.
of 30 trillion is $3 trillion. We have $3 trillion in that case being reinvested on Jan 1, when the average flows on a daily basis that decide direction are about 100 to 150
Boeing
billion.
CEO says long-term
That's sitting out there on
financial
Jan 1. That's part of
forecast
why
under
the
review. That's
Santa,
Bravo
that's the
Alpha
major
P.
reason why the
Certain
Santa Claus
forecast under
effect and the
review.
January effect, that
Oh,
4-week
geez.
period, is by far in 100 years dramatically an outlier to all other months of the year. That in up years is a dramatic reinvestment that happens in markets. People don't understand that, but that's the primary driver. There's another driver.
Well, that's a
as you
1-minute
get
cup.
into
They didn't do
Thanksgiving
anything.
and Christmas. What volume weighted time? It's a
Really should
term
have
that
waited for a
we've
2-minute.
created, but essentially think of it as time. There's more holidays. Okay, take the holidays out, but then there's more days around the holidays where volume is incredibly low.
Yeah,
So we
take it
lose
out.
about 30% of the time
Well,
relative to the rest of the year.
Didn't do what I
during
thought it
this
would do.
period
Move
from
on.
essentially Thanksgiving to
Starbucks.
January 15th. You start with
What?
Thanksgiving, you go into
Should
Christmas,
21 break.
then you have New Year's, and then you have
Bad
MLK.
fills. 130s.
There's a lot of
530s.
holidays, a lot of people taking time off in that window, so time compresses dramatically. Why does time compression matter? Well,
I'll take a
mentioned,
UAVS, Uniform
all of
Alpha
these
Victor
other
Sandy.
effects
Sure
out
seeing an
there,
increase of
right?
activity, new
We're talking
highs,
about
UAVS.
charm, but essentially, what is that? There's a skew in insurance in the market, particularly at the end of the year. That exposure is very big. There's a lot of structured products. There's a lot of puts hedging at the end of the year because the December expiration are leaps, and they've been on the market for many years. Most of the risk in the market is tied to an annual basis, and that sits out there in December, particularly on an election year like this. Year's even more earlier in November, and a lot more risk kind of targeted in the area. That's hedged by the street. That's warehoused by banks, by market makers.
Really like
by
what
funds.
LRN's doing here.
And there's a carry trade essentially where everybody is short put or downside exposure, long call, because the puts are priced very high, the calls are very
Well,
cheap.
it's
and
not
they're
really a
short
wedge,
stop.
but certainly
That
price
trade makes
compression.
money if things go sideways. It's a natural
Got a high, lower high,
money
lower
maker at
high,
baseline,
lower high. It will
much like a carry trade.
low.
In order to lock in that money, there are flows, which is
Higher
just the
low.
buying of underlying market as
Higher
time
low.
passes. That's what we call charm, and volatility compresses. That's what we call mana. So those things are
Higher
natural.
low.
They may sound
So
very
very
complicated. They're
tight
a massive, major,
spring.
important structural thing that drives flows that are positive in the market. And it's uneven. It doesn't just happen day over day. It happens when there's concentration of exposure. That's that wall of worry when people are hedged
What
to
is this
for a certain
bullshit
event.
candle?
There is all of this positioning in the market that's
Took a
warehoused
couple
broadly
$100
by
from me.
players that need to hedge. And in order to capture that edge, they need to buy back stock. They need to sell volatility. And that's focused at the end of the year. So when you compress time, when you accelerate it, you have a lot of exposure back there. Guess what? There's a lot of positive flows. So these are the two main parts. They're mostly focused there at the end of the year. And that's why seasonality, which people create as a magical Santa Claus and all kinds of, Easter
Was it
bunnies.
Starbucks,
they-
9650?
RTX is
not
Collins
actually
Aerospace.
magical. It's structural.
Spans executive aircraft
It's
seating
tied to
operations in
positioning
Bethany,
primarily in the
Florida. That's Romeo
marketplace.
Tango
These
X-ray.
have nothing to do with who wins the election or who's bombing who in what country. They're flows that are inevitable. Events pass, time passes, and these things come in. Now, they're not the only flows. They're not the only thing that matters, but they are the voting machine. And at the end of the day, the weighing machine still will overcome those things, but that can be years. And if you're asking me weekly prediction, monthly prediction periods, I'm going to be much more tied to what the flows are and think about those things. I think people assign way too much value
something
to
here.
the weighing machine in the
3590
short term.
breaks.
They do matter in the long term.
Starbucks.
Go back to some of the
9665.
questions here from the live viewers. From I am McLovin. Nice callback, by the way.
What a
There's always a
name.
lot of anticipation for volatility when it's a triple witching day. Rarely does this come to fruition. Thoughts on that?
Exactly what I talked about. So the wall of worry, there's I could name 10 adages. All these adages are things that people have noticed over the years. There's real truth to these adages. They tend to happen. People don't understand why. They assign magical things to them. One of them is the wall of worry. Another one is seasonality. All these things are tied to structural flows in the market. The wall of worry, the primary input to the wall of worry is people hedge. People take the bankruptcy risk, the risk of losing everything off the table, and not just people, entities, institutions.
Oh, come on.
When they perceive risk. And the reality is those have reflexive effects. That positioning ultimately drives a opposite, because the world is hedging it and warehousing that risk. An opposite effect. They have to buy back the deltas when those things disappear. So there's a natural, again, reflexive effect. Triple witching is where the majority of a lot of that optionality is focused. So options, futures, everything is focused on that that expiration. And if that's where the positioning is, that's where the reflexivity is the largest. So much like a big event tends to not materialize. One of the best trades is to sell Fed vol or to buy the market on Fed days. I think the stat is something like, if you look at the last 50 years of history, you just took out the Federal Reserve days, the market is essentially flat.
That's crazy.
All returns come on those single days.
What?
Again, is when those things disappear. So there's a natural, again, reflexive effect. Triple witching is where the majority of a lot of that optionality is focused. So options, futures, everything is focused on that that expiration. And if that's where the positioning is, that's where the reflexivity is the largest. So much like a big event tends to not materialize. One of the best trades is to sell Fed vol or to buy the market on Fed days. I think the stat is something like, if you look at the last 50 years of history, you just took out the Federal Reserve days, the market is essentially flat. Almost all returns come on those single days. Well, that's again because people hedge on those days, and the Fed is reflexively likely to try and not create volatility and compress volatility, and you have these kind of bias, embedded flows in that window that naturally come off as the event passes. An election would be another event. People are worried, people are scared. Guess what? Most elections we've seen, the event passes, what happens? We rally regardless. People were scared of a Trump election, what happened? We rallied dramatically. People were scared of a Biden election on the other side, what happened? We rallied regardless. These things are not tied to what people think in the outcome. They're more tied to the structured positioning in that window.
So I got to ask you on this. Speaking of wall of worry, because you put this post out a little ominous without any commentary. Normally,
So
if I
everyone leaves the company and then this thing moons.
Lost.
I need my own tag word, right?
Yeah, well, you got the
croissant.
promo.
I'm just going to
Yeah,
put a
exactly.
croissant up. That's it.
Oh, wait, but can I ask you, like, do you eat croissants like regularly?
Croissants, you mean?
Croissant.
Yes, I eat. Yes, I eat croissants.
Okay, so
They
you're
are
eating
buttery,
your-
they are flaky, they are delicious. If you don't like croissants, I don't know. something.
What's that?
gotta
What's
get-
that croissant donut? The cronut? Am I
Cronut.
thinking of that right?
That may
don't
be a
do that?
bridge too far. I'm not sure that I'll do a cronut, but I like a donut here now and again. I prefer a croissant, but a cronut is a bridge too far.
So you got to put that next time. But yes, this whole lost decades are more common than you think, obviously based on valuations.
Yeah, that
Why
is
did you put this
absolutely
out there?
nuts. Cell life.
Oh, lost decades. All right, you ready? Buckle up. Now we're going to talk weighing machine. We're done with the
Time
flows
for
now.
shit to get real. I got to name it that.
Yeah. So here it is. People who've been following me are going to be like, here we go. But you got to start at the beginning. There are big structural things that drive interest rates. Most people who've been around for the last 40 years who are not a bit aware of the kind of bigger picture don't or haven't read history or understand kind of economic cycles and why they happen would say, oh, all that matters for interest rates is the business cycle. People interchange this idea of deflation and economic contraction. Economic contraction. They tie inflation to economic expansion. Sure, for the last 30, 40 years, that's pretty much exclusively been what drives short-term interest rates. But what's happened for the last 40 years, we've seen interest rates go.
I take a Fortinet
secularly
FTNT.
from
No bleeping
20%
computer
to
is reporting
0%
Fortinet has finally
20%
disclosed
to
a new
0%.
actively exploited critical Fortinet
So there's a
manager
bigger
APA
structural
flaw.
secular effect, right? That people have
Our
kind
shares
of
are
broadly
selling off on that
ignored
note. New
because
lows
it's
for
just been
Fortinet.
cheaper and cheaper interest rates, and people have become complacent to that.
Really
That
tight
secular inflation
LRM.
can't happen. Some people have argued for the last several, which is what happens when you do something for 40 years. People just say, oh, well, inflation is dead. We'll never see inflation again. The Fed has tamed inflation. This is a different kind of world. And for most people, 40 years is forever, right?
I'm gonna add UAVs.
But what people don't realize
charts.
is that the Federal
Thing is going
Reserve,
nuts.
in 1971, when we were taken off the gold standard, went from being a somewhat powerful thing that was created to smooth the business cycle to all powerful. A fiat currency, with the reserve currency of the world, means the Federal Reserve can do anything. It has the power of the largest economy by far behind it, and has the ability to essentially create money without cost, and can control kind of all things. In 1996, Greenspan became very aware that this tool, which they had been wielding for some time now, was able to had created a much more structurally deflationary environment, one that allowed them now to maintain lower and lower levels of interest rates, and that they could continue to lower the natural rate of interest rates lower, and the reason
Really bad film.
low interest rates are structurally deflationary. The reason we had created a deflationary environment
Starting
pretty
to try
simple.
to bring over
The
90.
Federal Reserve was mandated to
or
do
it's
two
actually
things.
83.
One, to maintain price stability and maximize employment. That was it. Very simple with one tool, monetary policy. If you do that, the best way to solve that and optimize that equation is you just lower and lower interest
Really
rates
bad films.
whenever there's a problem, whenever the business cycle gets in, things slow down, the market becomes shaky. How does that not create inflation? Everybody thought when they started doing that we'd get inflation. Well, pretty simple. You're not sending money to people. Economists created a fudge factor, which they call the velocity of money. Well, yeah, we printed trillions of dollars, but the velocity of money has been zero. What does that mean? That just means that the money that they've been creating doesn't go to people. This whole idea of trickle-down economics was not trickling down here. It was simply sending money to corporations. Interest who borrows money? Corporations do. Yeah, people, the bottom 50% of people do not borrow money. They can't, for the most part. And to the extent people do above that, up till the top 1%, they only do in small amounts to the extent they can. Really wealthy people borrow a lot of money, and financial organizations, corporations borrow them overwhelming sum. So the Federal Reserve, when they stimulate, for 40 years has been sending money to the rich, to the top 1%, to corporations. And guess what? This is not a populist argument. This is just truth. guess what? That's not inflationary, because those things don't buy goods. Actually, what they do is they create globalization. They try and they're profit maximizing. They try and lower their costs and maximize their output. So it's created a technological revolution. It's created so all kinds of technology which have gotten rid of the need for humans to a great extent. And globalization, the water's gone to the cheapest places. The labor has gone to the cheapest places, the lowest points where things are the cheapest. We've become quite a bit more efficient. That's capitalism. Great. Capitalism's great. The problem with that is the Federal Reserve is not.
I still like this for
equality
upwards play.
Inequality.
Man, what a shit film.
And the long-term cost of monetary policy and supply-side economics, again, it maximizes GDP, but it does not improve median outcomes. Maximizing the mean and the median sound very similar. They are dramatically different things. If we're sending 95% of the gains to the top 1% and 5% to the median outcomes can get worse and worse while GDP maximizes. That's what we've seen. We've seen dramatic increases in inequality in the last 40 years. The Gini coefficient, which is the measure of the distribution of wealth in the U.S., has gone from 0.35 to 0.47. There's been a dramatic increase in inequality. We've hollowed out the middle class. Okay, these are kind of well understood at this point. The problem is, and why not do that forever? Well, if there weren't human beings in the system, that is GDP maximizing. We want the most technological innovation. We want to maximize GDP growth. Send all the money to the top.
Chart
get the best violin players, the best violins, and
momentum has started to shift, so that's good for the
longs. The problem is, we're not just trying to create beautiful music. There are human beings in this system, and we believe in things called equality and fairness and justice. And if we choose to believe that humans are equal and that we all have equal rights to opportunity and to whatever, that's a different economic system. That's where we've gotten to. We've had 2 generations. These things tend to go in cycles. The reason they go in cycles is because 2 generations means you've had loss of status of Americans and people in Europe and developed world for 40 years. People have looked at their fathers and mothers and said, well, I'm doing worse than my parents have. And then the next generation says, I have too. And that loss of status creates a real anger and frustration. That's what we see globally. That's what we see in the US. That's the core driver of the political strife that we see. And that's what is called populism. We're in a populist period where the people are saying, give me fairness, give me justice, give me equality. And that, at the end of the day, has been driven by Federal Reserve monetary supply side economics. That inequality was never what the Fed was, whenever Powell gets asked, he says, go talk to Congress, not my responsibility. The problem is it's one system. If you can continue, whenever there's a crisis, come in and stimulate and make the crisis go away, we're never going to have political change. It's like you never clear out the underbrush. You're never going to have a forest fire until the whole thing burns down. And so we've gotten into a point where, the people are there with pitchforks, trying to, they're coming into the forest, and we haven't had
good call.
A brush fire for 40 years. But the net effect of that is higher interest rates. So we've gone from a structurally deflationary period to a structurally inflationary period. If we start to put up borders, close the southern border and stop immigration, put up tariffs and do protectionism, labor costs go up because it's a closed system. If we start to prioritize median outcomes and we start sending fiscal policy and sending money to people to try and rebuild the middle class, yes, that's great for the median person.
When the market tends to run or sell off hard,
that is structurally inflationary. The velocity of money for
all the retail platforms tends to have
to fiscal policy
issues.
Being 100. So every dollar of fiscal policy goes right into the economy.
Such a quinky
and that goes right into goods
every
demand.
freaking
and ironically,
time.
That's inflationary, which hurts the poor as well. So there's a circle, and that's a very difficult thing to solve. You can't solve it overnight. You say we created inequality over 40 years. Guess what? We're going to solve it over 20. And so a structurally inflationary period is not good for
yes, nice 1 minute.
It's not good for profit margins. The last time we saw interest rates go from bottom left to top right, 1968 to 1982, a 14-year period, the market went nowhere in nominal terms and lost 70% of its value in real terms. 14-year period. People are like, what? I'm used to making 8% real per year in the market. What do you mean made no money for 14 years? Lost 70% in real term. in real terms for 14 years. Not to mention bonds, the 40 and the 60-40 that most people are invested in. Of course, as interest rates went from 4%, 3% to 20, lost everything as well. So 60-40 works great.
Big
Passive
dump on
investment, which
DJT.
everybody paints as
Go
a
low
new
a day, maybe we can
technology and
short some
innovation,
funware.
is coincident with interest rates going from 20%
China
to
nukes
0.
report.
The growth of globalization is coincident with these things too. Everything that's worked, technological innovation, globalization, all of these things
Defense
are tied
Intelligence
to
Agency issues
decreasing
report on
interest rates.
nuclear threats.
And populism is it drives the exact opposite. So if we're going to see a time of normalizing, increasing secular
Anyone
interest
else,
rates,
even though
doesn't mean it's a
we
straight
know
line.
that
Go look
China
at the
did not
60s
launch a
and
nuke,
70s.
but
We had
anyone
big-
else
big
just get like
rallies,
the
inflation,
heebie-jeebies
big
for a
drops.
second.
Federal funds rate did the same thing.
China
if you're getting
far
structural,
surpassed
secular
earlier
inflation type
nuclear weapon
populism,
estimates.
it's
China will have more
the
than
same. That is
1,000
very,
nuclear
very
warheads
poor
by
for equities, that's
2030.
very poor
So
for
this is the
bonds. I don't know if
intelligence
I answered
agency
your final
report.
question, but that's the lead up. That's what's happening. Big picture weighing machine in the world right now. That's a time of 68 to 82. What did we also see? We saw the Vietnam War. We saw an increase in the Cold War. We saw OPEC crisis and oil. We saw multiple assassinations.
No, Trigger
Does this stuff
SYTA, Sandy
sound
Yankee
familiar
Tango
to
Alpha,
anyone?
sure saying
Right?
increase of activity, new highs for
Does this kind of feel
SYTA.
similar? Not a coincidence. All of these things are tied together.
So you sparked an interesting thought experiment I think we can do here. You said it's not good for equity markets. Clearly has not been good for most equities, which is defined as small
LRN
caps.
still hanging
Small
out. Got an
cap
inside
stocks,
candle
large
to play
cap
off
stocks.
of now.
Structural inflation, higher income, presumably part of that, right? Maybe not relative to the nominal rate of inflation, but that keeps on going up. I wonder if structural inflation in this cycle is oddly not good for equity markets, but good for market cap weighting. And I say that purely because, and this is where the thought experiment comes in, to the extent that you have structural
I just
inflation
played it,
and
QFI.
wages go up, and you have this automatic
Just
flow
played. I'm
into
waiting for a
401ks
pullback on
and
it. It's
Vanguard
quite the
market
mover.
cap weighted type S&P type products. That distortion between large and small gets larger. For most people's definition, the S&P
really want a
is the
piece of
equity
this,
market. In reality, it becomes more and more concentrated.
LRN.
I think there's something to that. I think
5-minute candle.
during
Bollinger-
the one thing I didn't highlight is 68 to 82 during these focus periods. It's because it's demand side economics. The economy does actually quite well. GDP growth was actually above trend. 68 to 82, in real terms, not just nominally, like in a very inflationary period. That's why we had inflation. We had a very hot economy. The problem is equities, which people think are tied to, if GDP is good, that means the equities should do well. No, because profit margins are at record 68 to 82, profit margins collapse. All the inputs costs go up, right? If you can no longer globalize as well, labor costs go up, input costs for commodities go up, et cetera, cost of money goes up. Margins contracted, plus importantly, multiples go down. Why? Because the bond market, which, if you could get a 10-year yield at 20% in 1982, why the heck would you go invest in the stock market at a 20 PE? The PE's got to come down. There's an arbitrage there. The PE of the S&P 500 in 1982 was 4.5. 4.5. Yeah, people are like, what? That's crazy. No, it's not crazy. If you can get a 20-year bond a 10-year bond at 20%, you would never buy the equity market. It's risky, and there's no need to. Anyway, so
Shut up.
That breakdown is real. So the economy is very strong. And to your point, to answer your question, yes, people will be getting in this environment in the U.S. and the developed world more money. The middle class will get more money. So I encourage you to think about, what will those people invest in? What will those people do with their money? That's what will do well. To be clear, the top 1% has done very well for the last 40 years. And what are the best returning assets? Wine, art, luxury homes, right? Go down the list, right? Those things are going to not perform very well. I could argue they'll be in a massive bear market for the next 15 years. Whereas, what people invest in, and by the way, tech stocks, growth companies have done incredibly well. What are average people going to invest in? I think residential real estate will probably do incredibly well. I think think about consumer goods and trends that are tied to this millennial generation on down. will do incredibly well. Government spending and will be at the center of all this. So things tied to that. So from a structural perspective,
Come
that's the case. In
on.
terms of the passive investing thing, it's much more complicated.
Just did a failed
The
cuck
idea
right
here that passive investing will just invest because of the momentum effect. I know Mike Green, thought a lot about these things and we've talked about it. We'll just continue to passively invest in the same things and lead those things to be just this momentum factor because everybody's putting their money in a
Okay,
401k
jeez.
is a tenuous argument because
Starbucks
momentum
really
works
tight
until it
inside
doesn't.
5 minute
And once
candle.
it turns, everything gets reinvested in something different.
Something to play
and I
off
would
of
argue
that.
some of the structural effects will drive new leadership. Will drive significant rotation away from some of the things that have been leaders, and then those things will get the momentum effect of passive and the momentum. I think passive investing will change dramatically. I think beta is not going to work. I think the reason passive investing has
should have
become
gone there.
the
Careful
core
on it if it
center of what
doesn't
everybody
make a new
does is
high.
because it's worked so well for 40 years because of decreasing interest rates. Why invest in something non-correlated? Why go into structured products or relative value hedge funds or other private credit or things that are less correlated if the market's returning 15% per year, even if it pulls back massively like it did in 2000, 2001, and 08. If it within 2-3 years, it's back at all times. Close your
Whoa,
eyes.
there's the volume.
Doesn't
Come
matter.
on, push it, baby.
Private
Give
equity
me
has
the
become dominant
85-20.
because it's essentially
That's what I really
taking
want.
advantage of the idea of, hey, well, let's just expand duration from 2-3 years, not make it mark to market or daily or monthly, and take it to 10 years. Because over any 10-year period for the last 40 years, guess what? It always came back, and we never had to deal with mark to market. We always had
There we
liquidity.
go.
What happens in a 5, 10, 15-year period where it doesn't come back? We haven't seen that for over
36.
40
Do we get
years.
it?
That's when private equity will have major problems as well. So I would argue
Take
that
half off,
passive
locks them
investing, by the
in.
way, indexing has existed for 125 years. It's not like passive investing or indexing is a revolutionary idea that they came around with 40 years ago. The reason people didn't invest that way before
There
is
we
because it didn't
go.
work. And I think just like now that everybody is piled in and saying, and Vanguard has taken a position of passive, low cost, all that matters is being in the same thing. Active management.
There we go.
is
Squeeze
exactly
it!
Management is likely to have its revolution, and relative value opportunities are likely
Hot
to be the
damn.
dominant way to invest.
I wish you could tell more people that story because this is the bane of most fund managers' existence as well as most advisors' existence. It's hard to be active and tactical in a passive-only environment, and cycles are still a thing.
Yeah, I mean, look, if you were a value investor for the last 40 years, pretty hard to compete with growth, right? If you were a active manager and trying to provide alpha, who the hell cares? It's expensive. If the market just goes up, just keep buying assets, right? Yes, active investment, creating a real edge is hard and it's valuable. If you can do it, that's very valuable. The value assigned to that has been almost zero because you could just close your eyes and make up for that 1% of alpha by just being longer leverage or beta. But guess what? When markets no longer return that, when people
hold
wake up,
that
usually too
85-30 and
late,
go for
a
round
decade
2.
later and say, what the hell happened? I lost all my money in 10 years. I wish I was invested in non-correlated investments. It's usually when the active management boom is at full swing and generally too late. So that's 100% the case. These cycles are long. The problem is people have very short memories. We don't live for a very long time. We're not, our memories as a generation are also short. So their big cycles matter. Generational change matters.
Very nice, Cheese. Very nice.
That right now.
Jen, for those who want to track more of your thoughts, more of your work, or learn a little bit about your investment strategies and firm, where would you point them to?
So the firm is Kai Volatility. We also have a wealth management division, Kai Wealth. You can find both online at kaivolatility.com or kaiwealth.com.
All right, that's the end of that.
And we
Good
we found
interview.
on Twitter, X, at JAM, JAM _
All right, 1 minute cock on LRN. Should be over 63, 85, 63. I really want to see high a day out of this biznatch. Let's finish up the video from yesterday on the compound. That one was really good too. She's a bit powerful. Good for me. Think so? I'll pull it up for your chat in just a second.
When we first saw this plunge in rates coming off the middle of the year, you didn't get a response in applications. That was kind of concerning. Like we went down almost 6% and you didn't see an immediate tick up. You saw refinancing, but not new
Because it's
purchase.
still from such a high level.
Yeah, but that's the thing
What's
is
the
like,
magic number? They say
Starbucks
5.
5 minute
well,
is
I
still
think
there.
if you look at the national builders, they're like, yeah, you got to get a 5 in front of it, and they're able to buy down because they have huge margins and they can incentivize people, and that's why those builder stocks have ripped, right? Is because they can dominate the market in this environment.
We had 668 on the 30-year today, which is the highest since the end of July. It's kind of wild.
Not good. That's not good.
Mike wants to play something about risk here.
It's
not
Just a little bit.
issue groups, I thought, which is interesting. So you show that only 62% of industries have gained jobs in the past year, and that's getting close to historical danger zone. What are we looking at?
Same thing. It's the breadth, basically, of industries that are growing jobs, and it's falling. I mean, this is like, this is what I think the Fed's looking at. Stuff like this, stuff like the housing market pipeline, and they're seeing it, and they're like, we don't want to see unemployment go up anymore. We've basically had unemployment go up because of a supply increase, and anything from here is going to be really, non-linear, as they would say, in unemployment gains. And so this is just showing that the breadth of industries growing jobs has fallen to a level that really marks closely with the start of recession.
So this is something to watch.
Absolutely, yeah. That's
Yeah.
one of the other things we watch. I mean, the market tends to have a tough time once this gets below 60% too.
Let's do this soft landing. Mortgage applications need to respond to lower rates. I agree.
Wait, what chart are you on?
I don't know.
I got you.
Like if you're constructive on 25, part of the reason for that has to be like the housing market's going to normalize and activity, not prices, activity is going to pick up, and mortgage applications are kind of like the best way to think about future activity.
Yeah, man. I mean, this is in order to revitalize the housing market, we've seen like this really strong relationship between mortgage applications and rates. And so when we first saw this plunge in rates coming off the middle of the year, you didn't get a
50.
response in
When did that
applications. That was
happen?
kind of concerning.
Was that this
we
week
went
or
down
last
almost 6%, and you didn't see an immediate tick
Are you
up. You
talking
saw
about the first time?
refinancing, but not new
Because it's
purchase.
still from such a high level.
Yeah, but that's the thing
LRN
is
What's the
Red
magic
going
number?
for it
They say
again.
5.
well, I think that if you look at the national builders, they're like,
Just
yeah,
that
you
1
got to
minute.
get a 5 in front of it, and they're able to buy down because they have huge margins and they can incentivize people, and that's why those builder stocks have ripped, right? Is because they can dominate the market in this environment.
We had 668 on the 30-year today, which is the highest since the end of July. It's kind of wild.
Not good. That's not good.
Mike wants to play something about risk here.
You have to do it.
I meant I want to play something that Mike wanted to play.
I got that.
You have that?
So hold on, before we do this.
Look at that guy.
So Warren was on the floor of the New York Stock Exchange with our friend Michael Santoli, and you said something that I thought was worth talking about. Video on.
The Fed just cut 50 basis points and rates ripped on the back of that. So if we do a thought experiment where we say the Fed came out tomorrow and they took the Fed funds rate down to 3%, which is like, say, what they think neutral is, what happens to the 10-year? I'm not quite sure that the 10-year actually goes down in that scenario. And so I think that's a risk the market is going to have to work with and struggle through here as we go out to the end of the year and into 2025.
Yeah, those long-term yields.
Kind of provocative. What's the thinking behind that?
Well, the thinking is that there's something we talked
Dip
about
and
last
rip
time I was
potential
here,
on
is that the 10-year
Starbucks.
has already discounted all of the Fed cuts. So
All of them?
All of them, in my opinion. So they have 200 cuts planned.
What's the terminal low for rates then?
Based on their SEP, they think 2.9% is the terminal rate.
So call it 3.
Right. We've done, I think that's low or potentially low. Like we look at
Jeez.
something, the 3-year rate 2 years forward. So we're basically saying when we subtract out we normalize the Fed policy and see what kind of rate you'd get between years 3 and 5 in the bond market. It's like 3.8 right now. So in my view, neutral is probably somewhere between that number and what the Fed's saying. But let's just give the Fed credit and say they're at 3% terminal rate.
They managed to get down there.
Right.
Okay.
The historic spread for the 10-year versus the Fed funds rate is like 110 to 140 basis points, depending on where you start your historic study. So if they get to 3%, the 10-year is fair value, I'd say, at 4.25. And so I think it's for one here. We've already discounted all those cuts. And I think the reason we're still below that level is because we're coming out of that growth scare. Anything sub 4%.
Well, why
on the
does
10-year,
wait? So why does it matter? Because it represents competition for equities with a 10-year at 4%.
Well, number one, the 10-year is going
UARES
to influence
5
mortgage
minute
rates.
setting up.
Mortgage,
Okay.
and it's going to influence. So one of the things, we've been saying is this is a bifurcated economy. So a lot of times, I think last time we talked about this is like, who's calling
Don't like
for a
this
rate
1
cut?
minute
Is one of the
though, so
things we
careful
talk
on
about.
that.
And it's like, well, if
When it
you
comes
look
to
at
these low float
automobile sales, they're
shitters,
below
when the
2018
MACD
levels.
1 minute
You look at
MACD
existing home
is
sales, they're
down,
below the trough in
crossed to
2009.
the downside,
So there's
and you're
a
going
huge
high
swath
day,
of the
a
economy
lot
that
of
really is
times you
begging
will
for
get a
lower rates.
break and
And
dump.
that's not transmitted to the
or a
Fed
break
funds
of
rate.
levels and
It's
dump.
transmitted on the long end.
Yeah,
of
look
the
at that.
10-year.
Candle over
Here's your new
candle of
auto
some sort
sales.
and dump.
Yeah, we still haven't had a full recovery in the auto market.
Yeah, and I think that's a rate story. I really do. It's a durable goods
Yeah.
story in general. So you
'Cause it's
houses aren't
finance, 'cause
selling.
it's financing.
So the long
Yeah.
end went up a lot today. Mexicardi just tweeted TLT had the worst day since after the Tokyo crash. Long bonded to pressure. Is that
Shut
good
up,
though?
Freaking A.
No,
jeez.
not in my opinion. No, I mean, so what we look at again is we have a chart in here. It's not about a level.
Case
I
in
think
point
on the
is
10-year
this
that starts hurting
GMPX
stocks.
yesterday.
It's
We
when
saw
it
it
goes up too
yesterday.
quickly. So we have a study
Right.
where
It's
it's
a
like
shock.
we
MACD
take
is
exactly. We take a
down.
63
You got a
rolling
candle over
window,
candle
and
here.
once the
Looks
10-year
like it's going
hits
to
the
break out,
80th
right? Go high
percentile
day,
of
right?
that
Broke
rolling
some
window,
levels, right?
it's
What'd it
hurt
do?
equities consistently since
Boom.
2022.
All
So
over
here's
people's faces.
this is the chart.
So
Because why?
gotta
It's
be
an
careful.
inflation fear gauge.
It's inflation
basically.
fear gauge. I think it's
When it moves
volatility.
there might be
fast.
some other
Yes,
indicator
it's
that
volatility, it's competition.
does it
like
better.
you said.
I don't
It's
know,
about
but for
relative
me,
valuations are
with the
wrapped
1
up in
minute
this. There's a lot
MACD
of
on these
stuff
shitters
Well, I
that
guess
are
it goes to time
flying,
frames because
like this
my mind would
has
say, well, the
340,000
long bond,
shares.
yields rising is
You've got
economic
20 million shares of
strengthening.
volume today.
But if it happens too
Crazy.
quickly in the short term, it could be bad because it just dings.
Starbucks.
All right, so that's a risk. I want to make sure we don't miss any of these. Let's do the next one. The economy has never entered a recession with deficits this high. So there will eventually be a recession. And let's assume nothing gets done on by either party or anything bipartisan to actually address the deficit. Trump thinks he's going to grow his way out of it. Harris thinks she's going to tax her way out of it. Neither one of those things are really feasible politically. So that's like a systemic risk. Like what happens when you have a recession with deficits like this, and then you really have to make hard decisions?
We've never seen it. We've
Yeah.
never had it before. We're at 7%.
Sorry, put the bar chart up, John, if you don't mind. The green bars.
Yeah, this is you talk about, like, again, there's so many big charts and like details and stuff, but this is big
Right.
picture stuff.
Yeah.
This is like, you give me 5 charts out of the deck. This is one of them that you need to internalize, which is just, it's very difficult to have a recession when you're running this kind of a deficit.
And you're not fear mongering with the dollar amount. You're showing this as a
7%.
percentage of GDP.
Yes.
Which is the way
Oh.
it should. It should. You're not like
It's double
screaming about the
the-
dollar amount of the deficit
the last
without any
recession.
denominator.
Not at all. And the thing I
Fernando
believe,
looks like he hates when people
Yeah,
do
it's
do
really
that.
infuriating.
But how
That's
does
a
this,
chart crime.
what's the
Many
transmission
trillions.
mechanism through the stock market for the deficit?
I mean, it's money creation. It's just pure money creation to the economy. Like, so it's a point Josh has made for years, which is that when the Fed hikes rates, it's just like, it's
Stimulative?
It's stimulative to anyone who has a strong balance sheet. It's for the upper crust of society and the S&P 500 and stuff. I mean, they're just, you have $10 million in your bank account,
Yeah.
and you have 5.5% money market fund. Try to outspend that. It's
It's
impossible.
great. It's great for the treasurer at Apple. It's great for Berkshire Hathaway. They're just spewing cash.
Bifurcated.
That is
economy.
not. That is not restricting. That is not restrictive policy for people that already have money.
Exactly.
Right.
Exactly. And that gets into the system. It's economists would say those people have a low propensity to spend, but it's still getting into the system, and you can spend it out in the CHIPS Act. The deficit can be made up of all these different projects we've seen coming through. Eventually with Trump, maybe it comes through as tax cuts, but it gets into the economy pretty directly.
Show me credit card delinquencies continue to rise. So this is like one of those waiting for Godot things that people like have been looking for. So now you kind of have some signs of it.
Yeah, it just goes along with some of the unemployment stuff. I do believe that it's a bifurcated economy. Again, it's a similar theme, and it's why there's
What's
so
the
many.
y-axis? Is that percentage of credit card holders who
Yeah,
are
it's
delinquent?
holders, not dollars, right?
You want to
Fernando?
Yeah, I think it's holders.
It's holders. It's not
Yeah.
dollars. If
So
it was
this-
dollars, then we'd be fucking down.
So 7% of hold on. So 7% of credit card users in the U.S. are currently behind on their bill. Is that what this is saying?
By 90 days.
By 90 days
Yeah,
or more?
yeah, that's what this is saying. Yes.
It's not
So-
great.
So in
7%.
2010, that number for context was, what is that? 11%?
Yeah.
up there at 11 at the
All right.
top.
So there's
at the
room
top
for
top.
this to get worse.
Yeah, I mean, this is about the low strata consumer too. you
Does this
know?
ever turn around without a recession? No.
No, obviously, no. We haven't seen that.
Okay.
Oh,
It's-
great.
There's a first time for we're running a lot of experiments for the first time in this cycle, though. You know.
Okay. Let's do this last one. Soft landing. Historically, credit creation ramps in the year following the first SL cut. So this is a soft landing cut we just had.
Yep.
Okay. So that's in distinction to an emergency cut or fighting a recession cut. Okay. So what's the message here of the chart?
Well, this is going to the point of like the Fed being restrictive and fighting against that fiscal deficit. Is that in these soft landings, what you usually see when rates start getting cut in the against the context of a healthy economy, bank lending ramps up in the next year. You know, we've had very weak bank lending. So the Fed hiking rates has restricted the economy, just like we see in existing home sales and car sales. And you see it in bank credit creation. Like we have like real bank lending is just way off trend from this hike cycle. If you get a soft landing, what you need is to see credit creation pick up, because what that does, it solves for a lot of these things we've already talked about in the podcast. All that the rate sensitive stuff in the market, the more cyclical stuff, the equal weight, the small caps, all that stuff that's trailed, that should benefit if we get credit creation out here, and this kind of takes the baton from the deficit fueled expansion that we've had over the first part of this cycle.
How are you measuring credit creation? What's the data source?
Total bank lending. It's like a
So I think
weekly
you're
file.
missing it.
I don't know. How I
Do
feel
you think we're
about
missing? There could.
Trade.
What do you see?
The
Something off-
credit creation is coming from Wall Street and private equity.
That's a fair argument that we're missing that side of it. It's like off balance sheet or whatever you want.
I think right now credit creation is like
I don't know why I just did that.
rampaging.
I don't
I
like
think
it.
there's like endless amounts of credit for anyone who
But
wants
not
it.
consumer credit. Like Bank
Not
of America
consumer
just said
credit.
stuff.
Not consumer credit. Yeah. If
Yeah,
you
and
have a
that's-
business doing $5 million in revenue or more, there's 50 people who are willing to make you a loan via email.
I get pitch emails every week. I don't know if you do
No,
too, but
I've
yeah,
got 'em,
we
yeah.
do.
So that maybe what I'm referring to more is availability as opposed to actual creation. But I don't think anyone would say the quote unquote the problem with the economy right now is nobody will lend anyone
Yeah,
money.
I can get you a toe.
Well, I
You
mean,
should tell by 3:00 today.
there's something going on, and I do believe that this credit
Private
creation-
credit. Hello.
Well, what's going on? But why are auto sales so low? Why are auto sales
Yeah.
still below 2018? Why is existing home sales below the trough in 2009? Like these parts of the economy are huge components. I mean, durable goods. Look at like Restoration Hardware, what they talked about with rates. They need lower rates. Like that's high end consumers of durable goods. So I don't think that private credit is filling the gap. This is like a
For
12
consumers, no.
No, I think that this is if I recall off the top of my head, a $12 trillion data series, recent. So I mean, 8% growth in credit creation from the traditional banking sector is like $1 trillion of money creation almost that's coming into the economy. I mean, it's hard to replicate that. I'm skeptical that private credit's replicating that.
Well, Jamie is skeptical too.
Oh, what a shocker.
He basically says, look, all these people willing to
Failed
provide
cuck here
loans,
on the
we'll
1
do
minute.
loans too. You could call it private credit,
Looking for
but
that 5
we used to call it mezzanine. It's the same thing. We're ready to. The thing is, when the going gets tough, we're going to stand here and continue to make loans and service loans. And I can't say the same for all these other people that are out in the market trying to jam private credit loans to everyone. So, but it's notable. So, basically, you guys on balance, this is like the way that I sum up. And we had a lot more charts, but like at a certain point, people have to like eat and use the restroom.
For sure, yeah.
But tell me if I have the summation right, okay? So you're in this situation now where earnings growth over the next 2 years should be like spectacular. You said 32% by the end of
Yeah, 30% over the next 2 years by end of 2026.
Okay, like nobody would be mad if it was even close to that. Okay,
Right.
all right, fine. Valuations are elevated, but with good reason. The companies we're talking about have incredible profit margins, and they're growing, and it's diversified. It's not just 7 stocks. Okay, so you have that. The last thing you have is even if we don't get much lower in rates, we're still on a trajectory lower, which should take some of the constraint out of some of these industries, home building, autos, maybe.
That's
Okay.
the hope. Yep.
Okay, so you have that.
Could be
Working
an M
against
pattern
that
here.
is unemployment trends are going where you don't want to see them go.
You didn't get
And
the
some
cock,
of this
though.
stuff looks downright recessionary.
Mm-hmm.
And I think on construction and construction jobs, you guys said middle of the road, muddle through.
Yeah, you want to. If you were going to say one thing, you ask about starts. Single family starts need to be like above 85,000 a month.
And where are they?
They're like 83 right now, and they've been. There was a month where they printed down below 70, and that's a recessionary print. So like you can say if we stay at 70,000 a month, single family starts, we're going to have a recession.
But can't there be rolling sector recessions like we had for the last couple of years?
It's hard to. That's what I. Well, my theory is that the housing market is too important to the health of the economy for it to be a rolling true recession in the housing market. It would be
But
the
wasn't
first
there?
time.
Wasn't there? Aren't we in a housing recession still? Like for the last 2 years?
Not on new construction, which is what goes into GDP. So not on new construction. Like, we're
But like,
still,
but what about like real life? Like,
well, real life, it's tough out there, but
Yeah.
like on existing homes. So if you're a title agent or a real estate agent,
they had a horrible. couple
durable
years.
goods have been in
Yeah.
a recession, but durable goods can be in a recession, and it's different than you start getting layoffs in the construction segment of the economy. That's,
So the summation though here, stay long,
Pretty good.
stay long, right?
yeah.
Don't worry too much about valuations yet, because there's earnings growth that could bail those valuations out.
Yep.
And keep an eye on credit card delinquencies. Now at 7, you don't want to see
Whoa.
that at 9. And keep an eye on construction jobs and the labor market, and some wackiness in the 10-year if that starts moving too quickly. But like that's so basically what you're saying is buy Tesla. Is that right? Is that the summation?
I think that's an
All right,
ultimate trend
that's the
trade.
title of this week. You guys have fun on the show today?
Absolutely.
Amazing time.
It was
Yes,
great
was this
being here.
cool?
Yeah,
Yes,
really cool.
Warren went home and said, "Yo, you got to come back up there. These guys are a lot of fun."
Yeah.
All
yeah,
right.
He was getting me pumped for it.
All right, dude, we love having you guys, and we love your research. And I might not get to every single thing that you send, but I never miss it when I get a chance. And I just think you guys have a really unique way of illuminating some of the biggest issues in the market. And you're very original.
hoping for a better move
to
there. This could be
Michael's
bad.
point, we get everybody's decks. Yours don't look like anyone else's. So
How do people?
shout
How
out
do
to you
people
guys.
get your shit?
You could 314research.com, put your name in on
Looking real
our
bad,
site.
actually.
I mean, we are an institutional research provider, so it's mainly like RIAs are a great client base, hedge funds, asset managers.
Oh, one
Somebody
more
has a
thing.
Robinhood
Random
account.
ass volume
They're
shoots
sort
it
of
up.
institutional.
Follow me on Twitter. You know.
All
Wait,
right,
one more
there's
thing.
enough.
You guys, sorry, I almost forgot about this. You guys launched an ETF and like,
Yeah, we got to
you
get
have
to that.
fucking
5 minutes.
$470 million in assets. Like, how did you do that? This just launched.
It was so this ETF is it's kind of a grassroots thing. We have a stock selection system, our full cycle trend model that we've been running for 3 years, and it's done extremely well. And so we had clients come to us and they're like, this thing rebalances every month. We pick 20 stocks out of the S&P 500. It's a quality screen, and then we do a trend overlay. It's really unique. And they were like, look, this thing is great. It does turn over like 3.5 times a year. So it's a high turnover
Put in
product.
ETF.
Put in an ETF, we'll invest. And so that was
Meaning rather than people buying the stocks themselves and doing the trades.
Instead of the SMA.
Yep.
But
So
this is like
in
a
an
lot of assets.
In an
That was
ETF
bad.
wrapper, you could
Come on,
lessen
you
the
gotta get back
impact
up.
of the taxable implications of that much turnover over the course of the year.
Exactly. That's what
So yeah, it's brilliant.
and so they said we want to invest in it.
What's
and
your
so
what's your ticker symbol on this?
Come on.
FCTE.
Where did this
96.44.
$500 million
That's what we
come
want.
from if you had to guess?
96.44
I-
break.
Well,
The Fed.
we've
Yeah, besides the
big
besides
asset
the-
managers like I can't drop names, but like we were in town meeting with probably the biggest asset manager in the world about getting us on their platform.
Okay.
The PMs that
Break
are
it.
clients. I mean, it's been honestly like the most
Break
like,
it.
genuinely touching thing to see our clients, like family offices that come through.
Actually
like,
giving you money.
yeah, like we want like here's $30 million, here's $40 million.
So wait a
hasn't
minute.
broken
What's
it.
crazy is you're not
There it
you're
is.
not an asset management firm. Well, now you are, but like it's not like you had the machinery to like, hey, let's launch a thing.
So the first 5 minutes.
We partnered with a client. So we had a client who was an RIA, SMI Advisory.
I
and
put
so
the sell
SMI
button.
came in. And
E-turn,
they were
you
like-
wanna
they
sell
were
for me?
leading the
Push it
charge,
twice
like,
now.
We would love to be
Up now.
be able to invest in this ETF. And so they really partnered with us, and they basically said, we'll form a joint venture. So technically the ETF is owned by a
All
whole
that
other
for
company.
Yeah, it's an RAA. It's like a
Suck
little
a
bit. It's a
dick.
little bit tricky because you can't double dip on fees.
Watch the
guys
cuck
partner with
now.
on the
Watch the
ETF
cuck
actually
in a
is
big way.
Title or
Title and
26,
Commonwealth
26.
are our partners there. And, as far as the trading side, there's a whole nother group that does the actual implementation trading. And then Fernando and I were running that model, and we're sending them the stocks.
so you guys. So it's 20 stocks at a time.
20
super
stocks,
concentrated.
Super
But
concentrated.
that's what people want now. They want something that looks really different.
Yeah.
from the mainstream ETFs they're already using.
Yeah, and I'm telling you, like, we
I can
have
quote
PMs
25.
at huge asset management firms, and like the first thing they come back to us is like, well, how do you stack up against this other quality ETF? Because our quality is our base, and you compare the statistics, we're totally different.
You don't get lumped in with the momentum like MTUM. That's not your comp. Your comp is quality.
They try to comp us to like QUAL or QLTY, but those are benchmark huggers. I'm just going to be honest.
You know why I love this? All right, these are the top 7 holdings. Lamb Research, Alphabet, Medler Toledo, I've never heard of that name, Brown & Brown, Pulte Group, Colgate Palmolive, and Amphenol.
All
Corp.
over the map.
Same
Like,
trading right,
this
right
is,
now.
what is this? It's
Market's going up.
We take the S&P 500. This
I'm
is
just
exactly
gonna
the
get out of
process,
this.
and we run it
This
every
isn't
month. Take the
working
S&P
right.
500. We have a quality screen. We grabbed the top 100 stocks by
we at on the
quality, and this is like
day?
return on invested capital, things we talked about, the stability,
UABS find that
drawdown,
worked.
stability of earnings. And we take those 100 stocks, we then rank them on our own kind of proprietary trend system. So we're looking for intermediate uptrends, and then pullbacks.
the quality stocks are an uptrend.
Yeah, quality stocks in an uptrend with a pullback. That's our 3 criteria.
And every month, the portfolio has potential to be reconstituted.
Our max turnover is 6 new names per month.
Do
And
you
so
trim stocks, or once they're out, they're out?
they're out, they're out. And then
Okay.
we rebalance
I like
to
that too.
5%. Every single month, you're getting rebound. So if one stock went up 20% or something over the month and became an outsized holding, it gets rebalanced back to 5%. So we're constantly harvesting gains there.
I like that too.
Love it.
Congratulations, guys.
Very cool.
Love it.
It's been amazing. And like, honestly, you guys supporting us and the way you like,
Oh, we
I
are.
always
We are the most supportive.
it's
No, we
amazing.
are.
No,
We love you guys.
you found,
Oof.
like, I tell people this because I think it just reflects
Nice.
on like how the type of guys you are. Is like, you found me on LinkedIn just from a report that like Meb had sent out,
Yeah.
and you're like, hey, do you want to go on a show? And it's just
I
been
like these
amazing
guys a
for us.
lot.
And like, without that kind of support from people all
314
over the place,
research.
like,
I really like the
we wouldn't have been able to
stuff they
succeed.
pull up.
And so
they
I
put
really
up.
appreciate it.
Love it.
We love hearing that.
Love it.
Thank you. Thank you for all that you guys do. We always close the show with favorites. Something that you're reading, something that you'd recommend to people, maybe a trip you've been on, or
What are you coding?
I don't know. What?
Well,
yeah.
I'm
You got
coding.
any
I'm
bits
coding.
of code you want to share with us?
I'm working on an AI agent to automate some of our chart creation, and
Okay.
I'm not joking about it. Like, it's
Oh,
coming along
you're
quite
already
well.
pushing him out.
I'm pushing myself.
AI pies. All right. All right.
Warren, anything for you?
I'm like on the Neil Dutta tip where I watch garbage TV at night. So Love Is Blind. It like
So
helps.
good. It's
you
so
you
good.
have to be able to shut your brain off, you know.
Great
and
show.
that's what I've been watching. So.
That's helpful. We've talked about this 3 times, but I can't get over it.
Dude, I can't believe we haven't spoke about episode 4. Yesterday when I left, I was like, we forgot to talk about episode 4. One of the best episodes ever.
So you watching The Penguin on
No, I haven't
Max?
watched it yet.
Are you?
It's
Is it good?
shockingly quality.
like,
It's really good.
Did you like the Batman, the movie The Batman for 2022?
It's okay. Yeah, it was good.
Matt
It was-
Reeves.
Yeah,
So
yeah.
they let him take Colin Farrell out of that movie and spin out into a TV show.
Yeah, it's on my list.
But you would think it's like, oh, more comic book shit.
Not
No,
at
no,
all.
no, no, no. This is the last episode. Chandani has a perfect score of 100% on Rotten Tomatoes. This does not literally ever happen. On IMDb, the episode has achieved a 9.5 out of 10, which is higher than the previous 3 episodes, which scored 8.8, 8.5, and 9.1 respectively. This is like Sopranos level accolades from not critics. These
Was
are
this
people
today?
watching
Oh, October
the
16th.
show, like regular people. And I don't know what it
Saying
is. The
S&P
combination.
oh, he
the
said that
scripts are
I know
great.
it is, just
The actors are
The
great.
writing,
yesterday.
it's,
Yeah, that's not Andy
S&P
Garcia, by the way.
7000.
It's not?
We both thought it was.
What?
Nope. No.
You guys have really come around on this show because
Yeah.
I was listening last like
I
few
thought it was
weeks
gonna be
ago.
dumb.
The first episode
Yeah.
was good.
You guys were
but
like, he rides in on a purple car.
The
Why?
most recent episode was so good. Wait, who is the dad? That's not Andy Garcia?
No. Looks like him.
Who is it?
He's a younger actor.
Oh, wow. Okay.
Yeah, it's not him. The main girl in the movie, she
Phenomenal.
plays Sophia.
Phenomenal.
She was the wife in Wolf of Wall Street.
Ooh.
Not
Oh, the original
not
wife.
Margot Robbie, the original wife that he ends up leaving.
Okay.
So, but I never saw her in anything. She's like a major part of the show, and everyone on the show is great. Shout out to Penguin.
That's a good tip.
You guys should watch that on the flight home. There's 4 episodes. That's 4 hours. You could blast your way through it. So, all right,
Mark Strong.
we'll do this later. Hey, hey, I want to thank everybody for listening. Guys, the downloads are going absolutely crazy for the show. We're getting new reviews. The YouTube is blowing up. It's an amazing time to be making this show for you guys. And I just wanted to say thank you to all the viewers. Shout out to all the YouTubers.
All right, good stuff today. Thank you, Cheese. Still watching this UAVS. Mm. Starbucks is still a possibility. Just did a 5-minute cuck after the cock and didn't do anything, so the candle over candle is still, break of 96.50, call it. CGC moving again. I don't understand that move of pot recently. UAVS only pops up if you sell. Hilo. Let's see where 15-minute candles on this thing. 49.
Ticker Apple AAPL note making quote out with a note on Apple iPhone 16 orders cut by around 10 million units for the fourth quarter.
Damn, Ming Chi.
Apple shares continue to sell off new lows.
Small win. See if this can get some shares and go short on it. This guy buys puts. I was too slow to get. That's my first. It's my first inclination. That's pretty bad news, right? So you got to think it's going to have more of a move to it. Oh, damn it. Okay. 10. What a horrible fill. How? Jeez. All right, Starbucks coming up to my level.
Okay. AAPL, Apple shares falling here. Apple analyst Ming-Chi Kuo said iPhone 16 orders cut by around 10 million units for Q4 of 2024 to H1 2025. No evidence yet that Apple
16 orders cut by around 10 million
intelligence could
units
boost
for
iPhone shipments in the near term. That's from Apple analyst Ming-Chi
Q4
Kuo.
2024 and first half of 2025.
Shares of Apple right now
Finally
falling here.
getting the Starbucks
239
move
low on
that
Apple.
I've been waiting
now
on.
Down about 2%. AAPL.
Does Chuck not have beta? Obviously, they talk over each other constantly, so there's a high probability that they do not listen to each other. But also,
the Apple suppliers also selling off SWKS, CRUS.
SWKS, CRW. These are CRW? No. These are Apple suppliers. Beta Chuck just called out. Good call. Let's get it. Nice trade. Okay. Okay, UAVSW on. Where is it? W on the 5-minute here. What is this? 34. Should do work there. There's the Bollinger Band. 1-minute MACD is up. 33 is my entry. Locks them in. Can I get 50 now? Right at that Bollinger Band. I don't know if it's going to get past it or not. Out the rest. Probably a nice pop if that 50 breaks. This 333 level needs to hold. Cuck. WKS. Wise Key. I'm sorry. WKEY. 30 million convertible note subscription agreement. I don't know what that means. Subscription agreement. Months of maturity. %of the lowest daily VWAPs, one of the Class B shares, during the 10 consecutive trading days preceding the relevant conversion date. SAG IPO open. That's a W. Tapped 50. No, tapped 49, didn't get to 50. It's 33. It's not a good sign that it got that close and couldn't push through it. There it is.
Ticker LGMK, Lima Golf, Michael Kilo. Sure, seeing a spike in activity, new highs, LGMK.
All right. Getting lift off here. Gonna get my eyes off the screen for a second. The walk.
Benzinger market update. S&P futures down 46. The Dow futures down 364. NASDAQ down 241.50. Crude is down $1.20. It's $70.54. Natural gas is flat at $2.31. Gold down 26.30, 27.3350. Bitcoin futures down 14.70 at 66,020. Coming up after the close today, earnings from TSLA Tesla, TMUS T-Mobile, IBM, URI United Rentals. At 2 p.m. today, the Beige Book.
I'm going to take a Broadcom, AVGO, shares seeing continued activity, new lows. Noted Apple supplier. Capital One Finance is selling off COF Charlie Oscar Foxtrot.
Shares of McDonald's dipping here now, falling back below $300.
Discover
Company
Financial
out
also
with a,
selling off Delta Foxtrot Sandy.
Statement on their website said the health and safety of our people and customers is our top priority at McDonald's, and provided an update.
With that headline, New York Attorney General is investigating on ticker COF and DFS. Headline circulations.
Shares of Capital One Financial, COF selling off here. Charlie Oscar Foxtrot, also Discover Financial, DFS. New York Attorney General investigating, hearing reports of an investigation.
Note, Apple shares seeing a spike in activity. No making control is giving a follow-up note. Just to avoid misunderstanding, 10 million orders refers to the sum of 3 quarters from quarter 4, 2024 to the second quarter in 2025.
Bloomberg reported Capital One's Discover deal is being probed by the New York Attorney General. That's COF and DFS. Letitia James seeking court permission for antitrust subpoenas.
Ticker McDonald's with more comments says they do believe the tainted source has been removed from the system.
McDonald's spokesperson speaking to Reuters says company was notified late last week on the outbreak. That's Michael Charlie Delta. Shares of McDonald's right now getting a little bounce off of that earlier dip. Now at 298.34, down about 5.25% MCD. DRUG, Bright Minds, shares getting a pop to the intraday high now, 48.80. Delta Romeo Uniform Golf, DRUG. McDonald's people say company has not ruled out beef as a part of the outbreak and is investigating the issue.
No ticker Apple AAPL shares seen an increase of activity. No CNBC now reporting on Ming Chi Kuo note. New lows for Apple.
McDonald's spokespeople said USDA continued to conduct their traceback to determine if beef is the source of the illness.
Dare Bioscience, ticker DARE, selected to receive $10 million award from ARPA-H's Sprint for Women's Health, ticker DARE. McDonald's spokespeople say a fifth of U.S. restaurants are not offering quarter pounder burgers, ticker MCD.
Ticker DRUG, share seeing a spike in activity, new highs, Delta Romeo Uniform Golf.
Bright Minds Bioscience, ticker DRUG, shares getting a pop to the highs of 53.60, trading up about 13%, ticker DRUG.
Ticker AIFF also seen a bump in activity, relatively light volume. Previously mentioned partnership with DRUG for AIFF. A note on ticker PSQH, Papa Sandy Quebec Hotel and DJT. Note Tucker Carlson is tweeting out Donald Trump will be joining Tucker Carlson Live. That now being circulated.
Schlumberger, ticker SLB, says recorded severance charges of $111 million in Q2 and $65 million in Q3 of 2024, ticker SLB.
NDLS Noodles and Company popping here, $1.35, up 15%. November Delta Lima Sandy.
Kamala Harris.
I ain't ready for this shit.
Harris's economic plan is here.
A middle-class tax break, $6,000 for new parents.
She'll lower costs.
Ban on price gouging and cap the cost of prescription drugs.
Now that's what I call an economic plan.
Guys, you already know what it is. It's great conversation, great wine. I know I'm
I ain't ready for this shit. Is this real? you can't hear. My bad.
And it's like
Somebody will enjoy the heat in here.
Okay. Anytime. Okay, my name is Tupac Shakur, and I attend Tamalpais High School, and I'm 17 years old.
Okay. Do you like being 17?
And it's like 17 is such a weird age. It's such a in the middle age. You're not 18 yet, and you're older than 16. So. But I like it. It's nice. It's like a learning stage for me.
Do you wish you could be 18 and when you get some more rights?
Well, 18 will bring lots of responsibilities that I don't want, but it'll bring respect that I feel like that's the only way I can get it. You know, I try to be as mature as I can be and demand it wherever I can get it. But 18 is like, you're an adult. You like today when I had to sign the release form, I felt so bad because I couldn't sign it myself. I had to go and get my mother's.
Vice President Harris now speaking.
18
says
it's just society's way of saying that you're ready.
That Trump would invoke
But
Hitler.
17, like I think I'm ready now, as ready as I'm gonna be in this world. But so it's okay. I
People
guess
will try
17
to
is
stop
alright.
him in first term, will not be there in his second term.
You should be given more responsibilities, or that you have much more value than adults place on you because of your age?
Well, the way that my mother brought me up is no lies, no, total truth. Everything is real in society, everything. If something's going on wrong in the house, I know everything. So it was like I was given the responsibility before I wanted it. And so now I can't really differentiate what great responsibility is because I've had it for so long. So she taught me how to be ready for it. And so that's good. And I think it's good because I know that, and it's taught me that when you get out there, the responsibility is staggering, and I'm ready. I'm going to be a little more ready than someone who's grown up in Disney World, with Santa Claus is coming. And so, I think I'm growing up good, as in all sense of the word. I think I'm growing up and learning about responsibilities and everything.
What do you think is the hardest thing about being a kid or being your age?
The hardest thing about being my age is proving to society that I understand what's going on. Like not everybody, but frequently teenagers are stereotyped in being loud music.
A note on ticker Meta MET. A note Meta is tweeting we're continuing to see exciting results on the work of Meta movie generational models.
Cokeheads, drinking
linking
coke
to
and
a
smoking
thread
and
of
being drug addicts and
posts, including video clips.
I mean, in
of
some ways,
general
I chase girls and want the car and loud music, but I like to think of myself as really being socially aware, and not just socially aware as being trendy, being peace. Not that. I really think that that teenagers, they got a lot of responsibilities and a lot of burdens because, in fact, we're given a horrible world. We're given the gift that we're getting when we got to take over is horrible. They left us, they're leaving this world in bad shape for us to fix up. So I think that we deserve a lot of respect. Because, in the 60s, they changed a lot, and those teenagers were given respect because they changed a lot, and they did a lot. We're given no respect, and we have to do a lot. I mean, the world, no secret, but the world is in bad shape. So we have to do a lot. We have to do a lot of good things. So I think we deserve a little bit more respect.
And why do you think it is that adults don't give you the respect you deserve?
Fear. They're scared. They're scared of watching us grow up. They're scared that when we get the power or responsibilities that we won't be able to handle it. And they're scared that well, I don't think, in this generation, I don't think that a lot of adults put enough into their children. I'm glad my mother did, but I don't think that a lot of children are growing up lost in the sauce. And I think that they're scared because they're realizing it now that, I didn't teach him this, I didn't teach him that. We didn't learn it.
LGMK shares seen a spike in activity, new highs. Lima Golf, Michael
sex
Kilo.
and drugs. You could tell if you look at the statistics, they're staggering again. And so I think they're scared because they're realizing that they goofed, they really messed up. And also, they fear teenagers are angry. At least this generation seems a little angrier to me and a little bit more rebellious and uninvolved.
That was him in high school.
You know what I'm saying? To the last word. It's been a whole bunch of motherfucking rockers. But I ain't gonna do that for the kids out there, so I changed. But Bob Online. So imagine it was a rap on the back of that. I said, Bob Online. Cool. That's it.
East Coast anymore.
That's so nonsense. Poppycock. Because this is not a new allegiance to the West Coast. I've been on the West Coast all this time. It's just because some people, not all, some people on the East Coast be on their dick so hard that they never heard me say that I'm living on the West Coast. It's just that by me keeping it real, I always said where I came from. I always gave New York their props. On Me Against the World, I took a whole song to give it up. So now on the next album, when I want to give it up from my
I just watched a conspiracy theory on Tupac. Play one with him and Epstein. Is that even on YouTube anymore? Yeah, good luck finding that one. Maybe it's on Rumble. Oh. So you just made that up.
Shares of Trump
Plenty
Media,
of Tupac,
dipping a
P.
bit here
Diddy.
now. Delta Juliet Tango.
Just watch conspiracy theory video. Community Discord. That Tupac was gay. And that his whole persona was just that, a character created. And I couldn't break it. I couldn't. Not like I'm the best person to defend Tupac. But it all started with that high school interview. I was like, damn you. You're ruining my childhood. Stop it. And maybe the breakup between P. Diddy and Tupac was a lover's quarrel. It's like, son of a bitch, stop it. Damn the internet. I think Big Papa Biggie. Check it out. Puff Daddy, Biggie Smalls, Junior Mafia. Tupac dating Halle Berry, right? No one can stay gay after dating Halle. That's right. That's what I hold dear. Well, not that I care, but I do care that if he was gay and he lied, the whole persona is. Is it all a lie? Was it all a show for money? I mean, can't blame him. He made a freaking shit ton. Also, he's dead though. So. Then you start to ask yourself, who else isn't? Who else isn't real? Is Snoop real? Is it all fake? Everybody! Don't do that to me. Was it side his earring on? The high, which interview? The high school?
Kamala Harris and Tim Walz have long records of working to protect reproductive freedom. They'll defend our right to contraception, IVF, and abortion. Vote for Harris-Walz because we deserve safe, healthy, happy lives.
I pity you people in swing states. You must get nonstop ads.
At TD Bank, we see
Your age and where you go to school.
Are you rolling,
Andy? How to take
Okay.
care of-
And the importance.
Okay. Right here. But this is the 80s. Like dyeing your hair. This is the 80s though. Right ear ring. I feel like that was kind of norm, right? I don't know if it meant
President Biden said the U.S.
what it
is
means
announcing
now.
today that we will provide $20 billion in loans.
I don't know
to
if he was
Ukraine.
meaning the Elton John. He's a very sharp individual, though. Not someone that you would think of as a thug.
They
Which
will
side
be
made you
paid back
gay?
by the
Right
interest
earring
earned
in the
from
right ear.
immobilized Russian sovereign assets.
That's the Elton John earring. What earring made you gay? If you got an earring in your right ear, it was supposed to mean you were gay. Yes, Reddit tells you that. Right. Okay.
That's ticker PRG, Papa Romeo Golf Oscar. Note, Governor Gretchen Whitmer is tweeting in partnership with the Michigan HHS. We are helping families access free contraception. This includes over-the-counter birth control pills.
Pop and drop, huh?
No ticker PRGO, see any spike in activity on those circuits.
Governor who said that? All the way down. Every PRGO headline always goes red for me. It never does anything after the initial pop. I'm just getting it out. Sell. E-turd. Sell it. Jeez. Laggy right now. Prominent brick summit. Checks go short. Anything is in chat. I remember this when I was going to high school. Anyway, that's what made me run back to I was like, was Tupac a character? Cool. Side note, one of the coolest things I ever saw was that Tupac hologram thing. Hologram concert. That thing was badass. Anyway. Rap was so much better and better. Yeah, absolutely. The stuff today I can't stand. On the days that I feel like listening to the rap, I only listen to the old school stuff. I can't take this new stuff. Right now, everybody list your favorite rap song of all time. Go. Unfortunately, mine is actually a P. Diddy production. Wu-Tang. Which song?
CAPR, Capricorn Therapeutics at the highs now 2129. Charlie Alpha Papa Romeo,
Method
CAPR.
Man? Poochie. We've seen Harry Mack, the freestyle rapper. Is that? I don't like him. I think I know who you're talking about. Harry Mack. Yeah, I just don't like him. He does nothing for me. He's talented for sure, but nothing for me. Vanilla Ice. Victory is one of my favorite. I've played it before on channel here. Victory. That's actually Puff Daddy. Yeah. Me so horny tonight.
Check me out right here, yo.
Yo, the sun don't shine forever, but as long as
U.S.
it's
assesses
might
that
as
North
well
Korea
shine
moved at least
together.
3,000 troops into eastern
Business
Russia in
before
early
pleasure.
to
P.
mid-October.
Diddy and the fam, who you know do it
U.S.
better.
officials
Yeah, right, no matter what, we airtight. So when you hear something, make sure you hear it right. Don't make it out of yourself by assuming our music keeps you moving. What are you proving?
I still to this day listen to this to get me hyped for a game.
I'ma make you love me, baby. Oh, shit crazy, ain't gonna get you nothing but choke.
And bad, yep. We had the Weed Leaf Green and Black CD. You talking about House of Pain? You talking about Chronic? Didn't House of Pain also have a Weed Leaf for how?
Programming note, ticker VRT, Victor Romeo Tango, no CEO currently speaking on CNBC.
I don't know. I'm thinking of they had the 4-leaf clover, 3-leaf clover. A lot of green in their stuff, but it wasn't that. That was Chronic. Dre. Yep. That's Jim's freak out party. UAVS. Oof, sure did take a shit. Watching for this LRN, looking for it to break this 8802 level. Warren G regulate. Yeah. $16 in the clip and $1 in the hole.
Donald Trump has no plan to help you.
Play
Just more
another
tax
video.
cuts for the wealthy.
I'm getting hammered here.
We're gonna give you tax cuts?
Whereas I will
Freaking
cut
political
taxes
ads.
for 100 million Americans. And unlike Donald Trump, I will put your family and our country first.
Give me the regulate video.
regulators. With the steel.
So I could get some phones rolling in my ride, chilling out some skirts for the streets. Night, a clear white. Mount up. It was a clear black night, a clear white night with some brothers shooting. They straight hit the curb.
Rip Nate Dogg, yeah. Tesla.
We'll ticker LGMK. Shares seeing continued heavy activity, new highs. Lima Golf, Michael Kilo.
See ya, switchers. Talking about doing drive-bys. Oh, yeah. That's what all the cool kids were doing back then. Except Sir Mix-a-Lot. He was going a whole different level. Some Claude help. Over 750 lines of code today. What are you writing, Buzz? Imagine 12-year-old white kid from Iowa singing that. It's me. Which one? Which song? Bone Thugs. Oh, regulators? Hell yeah. Mount up. Did that cuck? Oh, it did cuck.
Let's continued commentary come from CNBC on ticker McDonald's. That the CDC told reportedly McDonald's about potential E. coli outbreak late last week.
And you're getting McDonald's at what? 5% pullback. Something that is going to be temporary. This thing has been a monster. Not buying last night.
A continued note from on McDonald's. McDonald's quote uses multiple beef suppliers in the region, and its burgers are supposed to be quote cooked at an internal temperature that would likely kill the bacteria. That would leave the onions as the more likely contaminant. Coming from CNBC.
Ukraine's
Figures
Marchenko
of
and
passing.
Treasury
Good.
Secretary Yellen signed $20 billion loan agreement at the
2014.
Treasury.
I don't actually.
Says we don't want U.S. taxpayer to pay. We
But-
want Russia to pay, to repay.
Not saying that it's over as far as the headline, but it sure was a buying opportunity. Damn it, ripped right past it. Horseshit Phil. Horseshit Phil. So rip on IMVT there. BYND after this? Nah. Really? Well, with that.
That took our Wells Fargo WFC share seeing an increase of activity, new lows for Wells Fargo.
That pisses me off. No, I have not watched that. How much would I pay for a full North America? It's going to go for a lot of money. I mean, does he have every game? Because some of those are like thousands of dollars. I haven't done the comps on it in a long time because I just haven't been able to successfully buy a collection at a decent price. It's so saturated. What's up, Zap? Zach? Sap?
What's up, SJ? Been a minute. How's life?
How you doing? How you doing? How's life? Oh, you know, just dodging hurricanes left and right like a baller. I'm in prison. Zach's in prison. Yeah, he's got his tats. He's part of the Aryan Brotherhood now. Because you know you gotta pick your well, you don't get to pick, you're put in it, right, Zach? And that's how it works. As soon as you go to prison, you're a racist now, and you have to be. He's got his tattoos all over us. He's probably killed a man. He's got the teardrop. The Zach that we used to know and love is no longer. It's no more. Have you made love to a human? Expert in carving two brothers into deadly weapons. What the hell? I'm at a Big Ten school. I didn't answer the question. Wow. Drug out the candle over candle in the daily? I didn't say that. A biz frat or a social frat? Get on fan. We will VIP you and mod in a band Discord. All right. Are we talking if he rushes the field? Is that what we're talking about? Listen, Zach, here's the deal. You have to have a ginormous flag that says Twitch/StockJock. Run onto the field. ESPN has to catch it. And you have to be in the pregame show behind whoever the heck is doing it with the ginormous flag. Does not watch game day. I don't watch football. I don't watch anything. I don't even know what you're talking about. Get kicked out of college for SJ? Yeah. No. You do this. You do this at another school's football game. They'll just kick you out of the stadium. You're good. Then we'll let you back in. This guy has no idea. Why would running onto a field get you kicked out of your school? Another team's field. That's dumb. If that's true, that's dumb. The school gets fined for people rushing the field. Do they really? That's stupid. Freaking college is so stupid. It's about to be obsolete as well. I know you get arrested, man. Come on, slap on the wrist, really. Vitaly does it all the time. I mean specifically the learning process of college. Like, do we really need to go sit in a classroom and listen to somebody talk? They need to change the dynamic of that. No tier college. Frank Herbert. I'm the doctor. Young SJ in college, I would go to class in my pajamas. And my professors hated it. That's all you need to know. And people were like, my peers would be like, dude, why do you go to class in your pajamas? I said, I'm paying thousands of dollars to go to this school. I will wear whatever the hell I want. Smoking God. And I'm not talking like, oh, I'm talking full flannel pants. I'm wearing slippers. You could see it on my professor's face. Certain ones were cool. They didn't really care. Other ones, they just thought they were just too good. You know, the ones that like are professors their entire life and have no real world experience to what they're teaching. It's just all academic. That's the one that would give me the look. And I loved it. How did Apple pull after Ming-Chi? Oh, he hurt him. Still down. Under Blanky's chit-chatting all day. That's right. Dude, this range on LRN is crazy. DJT gonna do its late day push like it's always been doing. Come down to B-Town for a beer. Are you underage? I'm not drinking with an underage kid, Zach. I don't want to lose this again. Take a spot. Now I'm not going to lose it. Don't you think DGT is a perfect short into post-election? Post-election. I do think you're going to get it if he wins. I do think you'll get maybe the first day to whatever pop. But if it pops hard like day one, then I think it's, you know, a short after. Sell the news for sure. And if he loses, definitely sell it, right? Or short it. But I don't know what that pop would look like if he won. And the thing is we're probably not going to know who the president is day of, right? Everything's just so close. You know, mail-in ballots coming in. It could be a week where you might not know. So if that's the case, probably still a short. Thank you, Sri. I don't really see anything I care for right now. What do you think about Nat Gas technicals? I am not the one to ask about that kind of stuff. Someone else can chime in. You said 50K pop-up days nuts. I have been. I've been sized. Listen, it took me freaking 8 months to go from 25K to 50. It took me 2 months or 1 month really to go from 50 to 70. I've sized. But now the training wheels are back on because I freaking took a 3-week break. Thanks, Helene. Starbucks interesting here. Gotta break 67. Where's this volume coming from? So 5-minute cut can go. Come on, do it. Or you could just gap down. That's cool. It's cool too. Vic, this is E-Trade Pro. Does it mean India? I didn't see his comments. I mean, look at that. Come on! Okay. I can move multi-billion-dollar companies. Just tell me to go along. Well, I've given back half my gains, so I'm gonna call it. Where am I at? $300? Yeah, 380. I'm gonna call it. I was up over $850 and I've given back more than half, so I need to just throw in the towel today. Sussy. You're right. Timed out Zach for 600 seconds. I don't know what he said, but that's awesome. Look at that. I cratered Starbucks. I went long, and now it's just... I know. I'm looking at it. It's amazing. You want me to take billions of dollars away from a company? You just let me know. I'll go long it. I'll watch it crumble. Ball picking up. I mean, I'm gonna go for a walk or something, come back and be in Discord, but I came back, made 3 trades, 0 for 3 on them. Need to reevaluate. All right, I'm gonna call it here. $380. I thought I was gonna have $1,000 day today, but I've managed to dick that up. So, whatever. Keeping the win streak alive. Still day 3. It's the only 3rd day since taking 3 weeks off. Being completely unplugged from the market and life for that matter. No idea what's going on. Almost made what FEMA would offer you. Anyway, we'll be back at it tomorrow. It's only Wednesday. Decent week so far. Decent. I'll be back in Discord in a little bit. Go for a little walk. See you guys. Love y'all. Peace out. Oh, wait. Let me tell this person. Not my birthday. Not even close to 50. All right. Peace out, everybody.